Good morning, ladies and gentlemen. We obviously have a distance audience, so I'll just refer to you from now on as my audience twice removed. Welcome to the first live Metal Investor Forum in 18 months, 19 months. Welcome back. I think we're all glad to be over the hump with the COVID thing. I do want to point out that I think we're going to be good here in terms of distancing. We tried to set things up so people could have as much space as they wanted, and one reason why we picked this venue specifically was because there's lots of square footage out there. So if you don't really want people in your face, it's easy enough to get out of it. As I'm sure you all realize, the regulations mandate masks indoors unless you are eating or drinking. There will, of course, be food or drink at all of the breaks, so if you want to hide behind a coffee cup, you can do that too. I'll also remind everybody that if you haven't been to a MIF before, a live one, the way these work is each speaker has a block that will be their presentation first. In this case, it'll be Gwen first, followed by the company she's invited for this speaking block. At the end of the speaking block, there will be a live Q&A session. That will be in the next room over on your left. Don't worry, we always set up the catering so that if you're going to the Q&A, you're not going to miss out on whatever is being handed out at the breaks. I strongly recommend you do the Q&A sessions because a lot of the best information often comes out of the Q&A sessions because people ask the presenters the questions they don't really want to answer. So that's usually the more interesting stuff, quite honestly. That's about it. I don't see any point to drag the introduction out. I'm glad you guys are here. I'm glad we're back. I'm really glad that gold isn't sucking this month. Looks like we might all actually make a little bit of money here and there. That'd be a nice change of pace too. So welcome aboard. Thanks for coming. And without further ado, I will ask the lovely Gwen Preston to come up and dazzle you with her intellectual abilities. No pressure.
I guess you're allowed your coat. Oh, well, now Eric has set the bar very high. Good morning, everyone. Great to see everyone. I'm sure we're all going to say that to each other a lot over the next 2 days, but it is really nice to be in person again. So welcome. Thanks for being here. I'm going to go through my latest. Whenever I give a talk, I'm always like, oh, I gave a talk, 6 weeks ago, 8 weeks ago. I can probably just update that. But this was actually, I think, a situation where for gold, things have changed enough in the last 10 days that I had to start from scratch. So, woe is me, I had to write a whole new presentation, and it is titled How Times Change for the Bullish. So, that didn't do anything. There we go. I really do think, I want to sort of paint a picture of what was and then where I think we are now and what opportunity that lays out for the next little while, and then beyond that, which is harder to see because I don't happen to have a crystal ball. But we had been living in a world that was pretty upside down and inside out, right? Inflation had been ramping, but gold wasn't paying any attention. Gold was near all-time highs, but gold equities couldn't get a bid. It was just a situation where every time we got a piece of news that should, on a macroeconomic fundamental basis, right, support gold, the opposite happened, right? Like, you'd get signs, evidence that we have all this inflation, and gold would fall. And it happened over and over and over. And it was very, frustrating for all of us who are interested in gold. And I think the reason all that was happening was because the only trade that was out there was getting ahead of the Fed, right? Everybody was obsessed, has for many years now been obsessed with rate hikes, and that was the dominant thing. Everybody was just just concerned about getting ahead of a rate hike announcement. And so we had this upside down, inside out situation. The Federal Reserve certainly understood that fear. They knew what was going on. Of course, inflation at 6%, 5.5% as it has been, means that they have to do something. And so they tightened without rate hiking, which was really a perfect solution. They tightened without the fear factor, right? The fear factor had been the thing. And while doing so, they promised that they won't hike rates anytime soon. And since we now live in a world where the Fed telegraphs its moves explicitly, clearly for months in advance, there's actually some credibility to that statement. So now this fear of rate hikes, I don't know where I'm supposed to point this to make it happen, maybe over there. I'm just sort of waving it around and keep pressing the button until it advances. Now, the fact that the fear of rate hikes has been alleviated, at least for a while, I feel like in the last 10 days, we are actually back to a fundamental relationship between sort of economics and gold, which is very relieving. I don't know how long it will last. I think, as I'm gonna lay out, I think it's gonna last for the next 4 months or so until, guess what, rate hike talk comes to the fore again. But a lot can happen in 4 months that can be pretty fun. So that's sort of my focus, at least for the near term. And this is certainly a chart of those last 10 days. And guess what? All of these pieces of news that support gold in a negative, as an inflation hike, as an inflation hedge in a negative real rate environment, those pieces of news caused gold to go up. It was a very gratifying set of reactions. There, maybe I pointed behind me, just at the blue curtain. So yes, now I think we have a pretty clear runway for the next 4 months. Like I said, the taper move was the most telegraphed move in monetary policy history. Like, he told us that it was going to happen, and then he told us again, and then he told us again, and then he did it. And he did it at exactly the same pace that he told us he was going to do it. So the Fed, that's the Fed's playbook, right? They no longer are interested in the slightest in surprises. And so I believe that there will be no rate hikes anytime soon. Even though we have this pretty insane inflation rate, that's what they're going to do, because surprises would hurt in lots of different ways. And so if we're not going to have rate hikes until getting on for the middle of next year, but we still have this pretty persistent, strong inflation, and there's lots of reasons to believe that next month's inflation print for this month will be even stronger than the very high numbers that we saw just a few days ago. I mean, then everybody, the talk of the street, we all see it, the talk of the street is, how do you protect against inflation, right? And I'm not trying to say that gold is the only inflation hedge. There's always been multiple inflation hedges. I'm certainly not going to stand here and tell you that cryptos are not an inflation hedge. Try and fight that fight. Cryptos are a new entrance into the field of options, and absolutely, they can be an inflation hedge depending on your perspectives and how you play them and what role they take up in your portfolio. But what matters is that gold is the most proven inflation hedge, right? People aren't just going to throw out the idea of gold as an inflation hedge because there's a few new things that can also maybe play that role. And so I really do think in a situation where we have zero interest rates, really strong inflation, and no risk of rate hikes for the next little while, I don't think that gold could be better supported than that. And so that is a pretty exciting setup for the next 4 months. Just because, I mean, I don't spend a lot of time with technicals. I certainly don't draw them myself, but I like to pay attention to them when they show up in my inbox. This is Scotiabank yesterday. The technicals also look very good, which is exciting. So that supports some of these contentions about what might happen over the next 4 months. I don't make price goals for gold, but I think that we're going up from here for the next little while. So if this is what's happening, well, what do you do right now? I mean, those of us who are here likely have established metals portfolios already. And so, you know, we're not starting from zero and like building a new portfolio, but I do think that it's important to always, even if you love exploration stocks or, you know, usually just buy, you know, stocks that come from a particular group of people, take a step back and look at the situation here. Gold is about to make a big move. The gold miners and the gold sector stocks as a whole have been left behind. Gold has been trading in very high levels for the last year, but gold equities have not moved. They couldn't catch a bid. What is the first easiest thing to do in this situation? Well, it's to buy some of the big ones. And then as soon as those go, which they will, then you have those lovely returns that are, it's dangerous to use the word guaranteed, but they're getting on for, right? They have very little risk, and the potential for success is pretty strong. And then you have that play money again, if you want to call it that, to move into everything else that will get the next wave of buying. This isn't, I'm not, recreating the wheel here. This is a proven approach. And so, I mean, I just put some options here. Kinross, B2, Integra, Nucor. I put their stock charts from the peak of gold last August down to where they are now, right? Are they likely to go back vaguely to where they were in August if gold goes back up, to $2,000? I think that's a pretty reasonable expectation. There's 50% gains sitting right there for all of those in the next little while. So I have always loved exploration stocks, and I will always own lots of exploration stocks. I'm certainly not selling the ones that are in my portfolio, but focusing on buying in the near term will sit a little more, like in the next near term, will sit more with some of these easy opportunities. And then I plan to rotate that capital down into all of the more speculative stocks that I love so much. Now, what's going to happen 6 months from now? That's where things get a little bit foggier. It's very hard to know what's going to happen in 6 months, right? Will inflation choke out growth? Definite possibility, right? That's the kind of thing that inflation does. There's arguments out there that the strong labor market will carry us through the inflation. We'll see how that plays out. If inflation does persist, will the broad stock market suffer because inflation will hurt earnings? Or will it benefit because investors are trying to find somewhere to put their savings? And, stuffing them into stocks is one way of protecting your savings in an inflationary environment. I don't know the answers to these. I wish I did. I don't. But you just have to rest on what you do know, which is that the Fed is still going to be expecting to raise rates in, round about the middle of the year or in the second half of the year if inflation persists. Well, what's going to happen then? There's been this well-coined taper tantrum phrase, right? Well, I had to come up with a thing. So are we going to have rate rage? I mean, I think it's reasonable unless the economy is very strong, which it might be, but there's these inflation risks. Unless the economy is strong, it's very likely that the stock market doesn't tolerate very much in the way of rate hikes, right? They can get pretty mad. We saw that happen in reverse. That's what taper tantrum was. They had been raising rates, then they layered tapering on top, and the market threw a fit, and the Fed backtracked and lowered rates. Is that likely in the opposite scenario? They did the tapering, they try and layer the rate hikes on top, and the market's like, no, we are now in a situation where we expect a lot of accommodative support all the time. I think that that's fairly real. Of course, supported by the fact that there's oodles of debt, and Fed governors have acknowledged openly that the new sort of ceiling for the federal funds rate is probably 2%, which is way lower than the 4% that it has averaged for such a long time, right? So even if we do have some rate hikes, they're not going to go particularly high. So that all leaves us in a situation where gold is well supported even beyond this 4-month window, right? Where I think in the 4-month window it's very well supported, and I think odds of it maintaining, of the rationale persisting beyond that are pretty darn good. So that, but like I say, I'm not going to make promises about what's happening in 6 months because that's, a pretty cloudy outlook. Okay, that's been all gold. Gold is not the only thing that I like. Base metals certainly also matter, especially in a world of electrification where the demand increases here are really, really significant. I think it's important to remember that no rate hikes for the next 6 months also clears the way for base metals, right? The fear there had been that rate hikes would come in too early and they would choke off growth. And if you choke off growth, then you cut into demand for base metals, right? And so erasing or at least putting off that fear, I think also clears the path for base metals to perform in this window. Are they going to perform as dynamically as gold? Well, no, because they are not an inflation hedge. But the electrification argument, the demand increases from electrification for, big metals like copper and nickel, let alone some of the smaller metals involved in electrification, these are very, very real, very significant increases, right? I love to point out the incremental nickel demand from electrification. I mean, nickel has always been just stainless steel, right? Just stainless steel. Very huge industry, but sort of boring, right? Okay, stainless steel. The nickel demand from batteries is going to double the nickel market, right? That's an insane transformation. That's a paradigm shift for base metals. And, you know, similar, not quite double, but similar scale of impact exists for a lot of other metals. And so it's important to remember that that's the foundation. It's not going to be explosive and dynamic the way that I think gold is going to be in the next little while, but it absolutely makes sense. I also, just before I wrap up, I want to talk about M&A, because I think, of course, it makes sense that our sector is always aware, I wanted to say obsessed with M&A, and that's because of the way that the mining and exploration business is structured, right? We have small explorers, they advance assets to a certain level, and then the best outcome for investors, and usually for management teams, because they have expertise in that phase, is for those assets to get bought by companies that are good at building and operating mines. So M&A is a fundamental part of how our business works. And so there's been a lot of talk about where's the M&A? Well, I think it's actually been fairly present. I mean, maybe it hasn't had quite the gusto that we would like, but these are just some of the deals that are underway right now, right? So these are some major deals. These are big ones. Yes, I have one at the bottom there that isn't actually happening, and Eric and I have some interesting theories about what's going on with Barrick and surrounding Great Bear, and we can talk about those. But I think the cautiousness that we are all seeing first and foremost in the M&A landscape is because majors are terrified of repeating the mistakes that they made in the last bull market, right? Where they just threw billions of dollars of shareholder wealth down the toilet. And I'm glad that they're terrified of that, because none of us want that to happen again, right? And so they are being very cautious. And that has until now meant a focus on dividends and share buybacks and having a bunch of money. I mean, most gold miners are just in net cash positions, which is a pretty crazy setup given the scale of these companies, right? And the amount of, the amount of debt that most stocks, in the broad stock market have. So the focus has been on that. It's been on dividends, it's been on share buybacks, it's been on having lots of cash. And of course, we have been in a fairly sideways market, especially in the precious metals, right? So they haven't had their hands forced. Why make a move now when the share price is probably going to be the same in a month, in 6 months, whatever? Obviously, individual stocks have their own individual things going on, but like I said about opportunities right now, even a bunch of those individual stocks have been marching reliably through their catalysts, advancing their projects, and their stocks have still been sliding because there was this dearth of investors interested in gold stocks. If that is now changing, I feel like it could probably be the accelerator that we have all been hoping for in the M&A space. I mean, major miners are a bit like tankers. They take a while to turn around, so it's not like tomorrow we're going to get 15 takeover deals. But I think that this could be the start of the more dynamic M&A market that we've all been looking for. But I do want to note that that would layer on top of what I think is a market that is seeing deals. Let's not forget that there are deals happening, even if they aren't, taking out the stocks that we specifically own, and therefore we're annoyed that M&A isn't happening. Do I point it at myself? Down there. Okay, that'll work. That's all I'm going to say for today. I have another talk tomorrow, another session tomorrow, and tomorrow I am going to focus on uranium. So those who are interested in uranium, I have spent a lot of time in the last few months contemplating uranium myself and pulling together some data. So if you're interested in uranium, that's what I'm going to talk about tomorrow, what's happening, what I think will continue to happen, and what I'm doing about it in my portfolio. And these are the letters that are offered via Resource Maven. I'm very excited that Peter Kraut is here. Peter joined Resource Maven over a year ago, and we just met in person for the first time yesterday because COVID meant that we hadn't met before. So that's fun. I'm very excited that he's here in person to meet all of you, and of course I love that he has added Silver Stock Investor to the Resource Maven offerings. And with that, let's move on to hear from some of the companies that I own and, well, adore. And it's suitable, let's start with Tara, who could come up and tell us about the latest with Banyan Gold.
Good luck with the clicker. Well, thank you very much. It's great to see everybody here, and this is my first Metal Investor Forum, so I think it's a great time for all of you to hear the story of Banyan Gold. I became the CEO of this company in 2016. We've spent the last 3-4 years really getting down to the hard work, and I think now is the time to get out and tell the story because we've got lots of exciting news ahead. This picture is just our project site. In this image, you can see where our Ormac project is. That bright green area in the front is actually where the airstrip resource is. And notice in this image that we've got fabulous roads, highways, and even a power line. You may not be able to see it, but I'll see it a bit better in the next images. But that infrastructure is invaluable and really is important for our project. And I'll figure out how to make that work.
I think it's pointing down at that.
Okay. So, our Ormac project, we're located next to the Yukon's 2 newest miners, Victoria Gold's Eagle Gold Mine, and if any of you saw their third quarter results, they're really starting to cash flow some significant money now. We are the same age of mineralization as Victoria Gold. Similarly, we envision that our project could be an open pit heap leach mineable project, and you'll see our grades are fairly similar to theirs, and we're advancing our project very quickly. We're also beside Alexco, high-grade silver mine right beside us. It's a little bit older mineralization, or younger mineralization, but also our property does have some prospectivity for silver. We're not focused on that right now. Our management team, we have a real track record of success. We're closely aligned with our 2 neighbors, Victoria Gold and Alexco, and you'll see that in our management team and our board. And we, similarly to Victoria Gold, think we have multi-million ounce potential, and I think you'll see that in our images when we start to talk about our exploration program. That fabulous infrastructure, this is a Tier 1 jurisdiction where you can actually permit a mine. We've got very good relationships with the First Nation, as do Victoria Gold and Alexco. And what's the best evidence that you can actually permit a mine? It's that 1 or 2 has been permitted recently, and we have 2 that have been permitted right beside us, one which is also a heap leach mine. So I think that's really important in today's society is understanding, 1, the security of your project, because I think there are some jurisdictions which are risky, as well as whether or not you can get a project permitted. We put out this resource in 2020, about 36,000 meters of drilling ago, and we're well on our way to advancing this project. We're well capitalized, being funded into 2023 for our G&A, and we're unique. I have 3 drills turning today. We're really excited about our productivity right now, and we are a year-round story. We plan to take about a month off in January, but other than that, we will be year-round. So myself, I told you I became the CEO in 2016. I'm a geotechnical engineer, spent 20 years running a private gold production company, as well as doing consulting and everything from First Nations to environmental assessment. You'll see we've got a very skilled team with a diverse set of skills. We just brought on a new VP of Corporate Communication. Jasmine is here, and she'll be at the booth, along with Valore, so feel free to pick up our materials from them. And you'll see in our board of directors, Mark Aranto has been with Victoria Gold since they were started on their journey, and I envision we're about where Victoria Gold was 8 years ago, and hopefully we can get to where they are faster. And that's a forward-looking statement, but I'm pretty excited about where we're going. Steve Burleton, he's been very successful. He was with Richmond when they got taken out by Alamos, as well as the CEO of GT Gold, and took it down the path, along with a lawyer, and Clint Nauman is an advisor to us. There's nobody who knows the geology better than the 2 miners right beside us. And you'll see there are shareholders, Victoria Gold at 12%, and remember just recently they had that investment by Corp, Alexco at 7%, and a Cisco at 5%. And you'll notice insider ownership is 8.4%. And I will mention that I'm a 5.5% shareholder. And I'm the 3rd CEO, so I wasn't there for any founder stock, even though that was 15 cents. So I've purchased all of that in the market, and since I became CEO in every financing, and in this last financing to maintain my position, I had to put in over $500,000. So that's one thing that I look for when I'm investing. How much does management have invested? And if you check my SETI filings, you'll see I've invested over $850,000 in the last 18 months. So we're currently sitting with $15 million in the bank. That last financing was at 28 cents, 35-cent flow-through, and 38 cents. We're currently trading at 30 to 31. We're starting to get some attention from analysts. Sprott's been covering us. His Brock Saylor's price target is 55 cents. Richard Gray's been a shareholder for a long time, and we believe Cormark will start to pick us up fairly soon as well. And of course, Gwen has been following our story and invited me to this conference. So here's where that resource is located, and here you can see that infrastructure. Main highway, year-round maintained through the left-hand side there. Brand new power line. It was just replaced and was energized in January of 2021. So it's a 139 kilovolt line. It's only energized to half its capacity. They don't need to until they get another customer. The road with the height switchback is the government road that goes to Victoria Gold. It's just 40 kilometers down the road. The cleared square is actually their substation. So we've got power, roads, even cell phone service here, and we're a quick 30-minute drive to the main airport in Mayo. That resource that we put out, it is a pit-constrained resource. You can see the prices, $1,500 gold. We used in that to be fairly conservative. The deepest part of the pit is 200 meters, so we do envision this as very similar to Victoria Gold, roughly 1-to-1 strip ratio. And just to remind you, Victoria Gold's life of mine grade in their feasibility study, 0.63, with 74% recoveries. That, if you increase our cutoff grade by 50%, it remains a pit-constrained mineable deposit, but the grade goes up to 0.65. And of course, we've drilled 36,000 meters since we put out that resource, and that original resource only had 56 holes into it. So lots of exciting news flow to come to us. We've drilled 120, we will have drilled 120 holes. We've still got 90 that will be pending in the coming months and into the next year. That infrastructure is actually going to get better around us. The Yukon government committed in February that they're going to spend $63 million upgrading the main highways and roads. That's largely to support our two mining neighbors, but very exciting for us. I already talked about the power line, and there's actually fiber optic cable which goes from that substation out to Victoria Gold. So I've never been in a location that had that fabulous of infrastructure, and it's partly what enables us to continue to drill into the fall and winter. So here you can see our main project area. Now we have 254 square kilometers in this area. We are focused on this area that's roughly 5 kilometers by 4 kilometers, so a very small fraction of our property. Located right in the heart of that infrastructure. The airstrip resource there to the north, we focused our drilling last year on that. We drilled 10,000 meters there, starting with that original 774,000 ounces, which is in about 1.2 kilometers of strike length. We've extended it by 300 meters to the west and to the east and down dip. Powerline is where we've focused all of our drilling this year, or the majority of our drilling this year, and that's because we're seeing it grow so rapidly. We put in a 100-meter space grid, and 100 meters is a very wide space grid. Here the mineralization is in sheeted veins, very similar to Victoria Gold, but horizontal, and we can see 6 stack layers. We know it likely goes to depth, but because we're focusing on the open pit mineable potential portion, we're only focusing on that top 200 meters. And we're growing this area very quickly. We have 3 drills turning there today, one on the northeast of Powerline, one on the east side, and then you can see a star-like pattern in the center, which we're drilling a little bit of infill to really understand the variography and how this deposit is occurring. So all of that news flow will come out in 2022. Oryx Hill is that target that's off to the east. We drilled 18 holes there, which are still pending. We think there's the potential for another near-surface resource there. So we're fully funded for our drill program next year. I've already working on my drill contracts. We have our 3 drills on site, and they're not going anywhere. We've hired our crews for next year, and which I think gives us a huge advantage. We've secured our pricing, we've secured our equipment and our people, which I think will be in competition next year. We plan to drill 30,000 plus meters, put out a resource in Q2. Probably won't include all of our drilling because the labs are quite delayed. That will just give us more news flow. We do intend to start a PEA, and we're doing the other really important things to advance our project from the baseline environmental to the metallurgy. There's just another view of that area and our drill plans. You can see the airstrip there to the north and the soil anomaly associated with it. Powerline's a blind discovery and a new discovery we made in 2019. So this isn't a project that's been sitting around and drilled by multiple people. This really is a new discovery, and we believe this area has the potential to host 3 to 5 million ounces. I think in the Yukon, that's the number you need to get to. 3 million ounces, I think, is what will make you a very attractive target, or what you need for a project to do what Victoria Gold did, which was to build it. Some great results there, and you can see the drilling that we're planning to do. Oryx Hill, we've got both diamond drilling and RAB drilling to support that there's potentially a resource there. Again, other key parts of advancing that project, that metallurgy, can you recover the gold? The bottle rolls that we put out in February, 90% average recovery from both the oxide and the sulfide. That's because the host rock is the sulfide. The mineralization actually intruded into a sulfide host rock. We've started some conceptual mine planning, and that helps us design our baseline environmental programs and where we might want to drill to not find mineralization when we want to make that decision. And that community engagement and working with the First Nation is something that we've ramped up this last year and continue to do next year. Very important. So, you know, companies re-rate for a couple reasons. One is a total number of ounces, and in a strong gold market, which I think is coming, we should re-rate when we put out that resource, and as people start to see the results that we put out, just on quantity of ounces, but then the quality, you know, the value per ounce. If we're getting $50 per ounce in the ground today, by doing that metallurgy work, the conceptual planning, making sure that we're on side with the First Nation so the project can be permitted, Tier 1 jurisdiction with infrastructure, those are value adds which should increase our dollars per ounce. So that's the story. Exciting news flow ahead for us. You know, we are seeing inflation and supply chain challenges in the Yukon, and that's why we've secured everything from our pickup trucks to our drills, so that we know what our costs will be. Being funded and having 3 drills turning and a great crew, we're really set up for a great 2022, and hope that you all follow the story. Look for that major catalyst in Q2 with that resource update, and then we'll get on with looking at some economics with that PEA. So please come talk to us today or tomorrow. We'd love to tell you the story.
Thanks, Tara. Moving right along, I would love to ask Chris Gordon to come up. I always want to still call it Integra Gold. You would laugh, actually. Almost every time that I go to write the name Integra down, I have to go to the website to see if it's Integra Gold or Integra Resources. Anyways, that is unimportant. What is important is that Chris is here to tell you the latest about what this Integra is doing.
Well, thanks everyone. Nice to see some people in person again. I think most of you probably are familiar with the Integra name. So what I'm going to try and do today is give you some reasons. I think why we're all here is because we're either getting updates on stocks we own or we're looking for new opportunities. So I'm going to try and give you some reasons why I believe Integra is a good buy at these current levels, and give you an update at the same time. So first and foremost, as Gwen mentioned, Integra Gold was our first company that we took from about a 15 million market cap in 2012 to a sale to El Dorado for about 600 million in 2017, and kind of made our way through some pretty treacherous times during one of the worst bear markets on record. And it's one of, as you can see on the slide there, one of only 16 projects that were acquired, back in 2012 that actually have made it into production. So not only do you want to back a good management team, but you also want to make sure it's a team that can make a project sort of shovel ready, so to speak. And that is the team that you see there. It's the same team from Integra Gold. The only thing that's different is we've really beefed up the board of directors, as you can see there, from our first go around with Integra Gold. Another nice change from that is that it's not a mistake where so there's a 0 where it says warrants, and we learned the hard way with our first project. I think we had close to 500 million shares by the time it was all said and done and when we got bought, but that was a product of not having a strong reputation at that point in time and a terrible market. So we've been able to keep it nice and tight this time around. About 10 analysts cover the story. Price targets range from right around $6 to $10, probably averages around $7.50 or so there. So there's lots of sort of third-party opinions and thoughts on the project as well. And we're about 65% institutionally held, and Coeur Mining is a strategic investor in the project as well. Jurisdiction, always important. Idaho comes in number 9 or number 10 according to the Fraser Institute. So, and the fellow that you see there on the horse, he's not an actor or a model or anything like that. That's Butch Otter, the former 3-term governor of in Idaho. We're his only precious metal seat that he took there, and I think if you ask him, one of the main things he'll tell you is that we have the best path to permitting where we are in Idaho, and we have excellent relations with the government down there as well. So it's an interesting, when you look at Integra, it's easy to think that we're just purely a development story, and you'd be right if that was your opinion on us, but there's certainly a lot more to that story. We're going to be actually updating our PEA, which we did a few years ago, which talks about 10 years of mine life at about 125,000 ounces per year. We used the $1,350 gold price and $1,690 silver price as the input for that study, and give us an after-tax IRR of 43%. So, you know, at $1,800 gold, obviously that's a much higher number, and it was a pretty strong project, but it was only built on about half of our ounces. We only used about 1.8 million of our 4.4 to build that. And the reason mainly was that we didn't have enough metallurgy done on the sulfide material yet to really be able to confidently put that into a study. So with the upcoming pre-fees, that's going to change. The scale of the projects is going to change substantially. So, and I can't really talk too much about that, unfortunately, because it could be out as early as next week. So we're expecting that study to come out in the next few weeks with a much bigger sort of project. So this is the timeline. As I mentioned, a resource estimate will be coming out with that as well. But what really this allows us to do once pre-fees comes out is submit our plan of operations to the BLM, which sort of officially kicks off the permitting process. We've been doing baseline studies for about the last year now. We expect a record of decision sort of mid to late 2024. So really in mining terms, that's not all that far away. So I think, you know, when you look at a buying opportunity, you know, a re-rate on paper, there should be a re-rate on paper at least, and if this gold market continues, perhaps the market will give us more credit for the upcoming pre-feasibility with the bigger production profile that's coming out soon. But at the very least, at some point in time, we should get credit for that, whether it's, you know, now or not, I don't know for sure. It's interesting to see the gold price kind of do what it's doing, but there's still not a ton of volume sort of in at least the names that I own. So interesting times to say the least. But I think we all sort of believe that the justification for a better gold price is here and will continue to stay strong. So the exploration side of the story, that's where things get pretty exciting for us. This is just a bit of an overview of the project and kind of the main deposits that we have there. The black sheep that you see up in the sort of top left of that yellow sort of outline there, that's a 30 square kilometer exploration. It's sort of greenfield sort of aspect for us. We think it's the vent margin extension from Delamar, which is an epithermal deposit that extends up through that area. So when we've barely scratched the surface on about 8 targets that we've got there, we got a couple holes into 2 of them. We were able to hit the first time around. So lots of room for growth on this in terms of exploration as well. About 3 weeks ago, we put out some drill results from Sullivan Gulch, which is right by Delamar. This is the low-grade bulk tonnage, and it was a pretty outstanding hit, you know, over 100 meters of about 3.3 gram per ton. So we're able to easily add ounces. That's why next year we'll already be looking to do a pre-fees update. Unfortunately, some of these recent holes won't make it into the study that's coming out, but it's onward and upward at Sullivan Gulch in terms of adding low-grade ounces. Florida Mountains, where we've spent a lot of our time, I mean, if you kind of go back and you think back to when we started, we essentially were able to, without even putting a drill in the ground, come out with an inferred resource of close to 2 million ounces, just based on looking at all Kinross's old data and reprocessing the core and things like that. So it made sense for us the first few years to really focus on beefing up that low-grade resource, which is now 4.4 million ounces gold equivalent with 3.9 in M&I. But the focus is really largely started to shift into the high grade, which I'll talk about in a minute. But when you look at that circle there, and actually, does this one have the pointer on it? No, that one. This one has the laser on it? Okay. Okay. So hopefully everyone can sort of see what I'm pointing at. I don't know if I can, but At any rate, the light-colored area at Florida Mountain represents about 1.1 million ounces of that resource. This whole area to the side there is about the same size, and we've only got 2 holes into that, and it shows up extremely well on the soil geochem. And then to the west of that, we also have additional targets from IP anomalies that we haven't even touched on yet. So we think there's a great opportunity to expand the low-grade resource at Florida Mountain, as well at Sullivan Gulch and Delamar too. But where things to me get really exciting with our story is the high grade. So historically, 1860s to around 1910, this was a high grade with, pretty primitive mining methods, and they were averaging, 30 gram per ton gold using a 15 gram cutoff. So some serious high grade. So as I mentioned, we kind of pivoted towards that in the last few years, and now we've got just a little bit over 100 drill intersects into these 3 main vein structures below the low grade resource at Florida Mountain that are at least 4 gram per ton or better. So internally, we've done our own studies. We think there's somewhere between 750,000 ounces and 1.5 million ounces, somewhere in that range under there. So we're waiting on the BLM to give us the go-ahead to put an adit into the side of Florida Mountain so we can get underground and do some close-spaced drilling to get that into a resource category, hopefully within 18 to 24 months once we get the go-ahead. You can imagine, what that would do to the economics of the project. Has a very significant impact on that project. So we're pretty excited about that. And one of the best parts is typically when you kind of submit your plan of operations for permitting and you go and hit that dreaded Lassonde curve where you're just developing. So we'll be avoiding that by potentially be drilling into, this high grade area that we've already got over 100 hits into from underground, but also exploring and continuing to, add ounces in terms of low grade and high grade to the story at the same time. So it's a nice option to have that development, side of things. I think the story's a good investment from just the perspective of what we've got in terms of a mine plan and what we'll be beefing that up with the PFS that's coming out shortly. That just gives you a bit of a look at the pit constraint at Florida Mountain and then some of those high grade hits that we've hit right below that low grade resource. A little bit more there. Yeah, so some excellent grade there. We're pretty excited about that. And I guess the last thing I'll leave you with is, even if, this is a short-lived, run in gold, in which we really seem to need to be able to go to 2,000 or better to get most of the generalist investors back into the sector, even though it's an excellent price for the producers sort of at these levels. It's even if gold was to kind of be stagnant or stick around that $1,700 to $1,800 mark for the next year or two, when you look at, Gwen kind of touched on it a little bit, talking about the M&A, and we've seen some things happen. So we had National Bank put a study together for us about a year or two ago. We wanted to know sort of how many gold and silver assets were out there, and then we wanted to apply some filters to that to try and narrow it down to see what the stronger sort of companies were. And so, you take out ones without a recent study, ones with less than 50% precious metal production, ones with less than 10 years of mine life, less than 100,000 ounce a year producers, and jurisdiction obviously is key too, but one of the key criteria was, can you build your project for less than $500 million? And you can see that list is a fairly short list there, and in terms of capital intensity, Integra shows up quite well on that list. And then, as you can see on number 3, was just acquired recently there. So I think even if we were to be kind of stuck in this $1,800 range for a while, we're still an attractive target for producers as well. So that's always something that's nice to see when you're looking to invest in a company. And with that, thank you for your time, and look forward to catching up with you at the booth. Thank you.
Thanks, Chris. And one more presentation for this morning before we head over to the M&A. I love that I just called it the M&A room. The Q&A room, which is just over there. I'd love to ask Colin to come and give us the latest on Valore.
Okay. Boy, it's sure nice to see 3D bodies and get to wear a tie, all sorts of stuff. It's great. Thanks very much for having us. My name's Colin Smith. I'm VPX at Valore. Excited to tell you a little bit about what Valore Metals is doing. And without further ado, I'll try and make this thing work. So Valore is a member of the Discovery Group, which is an alliance of 10 publicly listed individually operating companies. You're probably familiar with some of the names on the page there. Great Bears speaking later today, great story. Kodiak Copper is on a discovery in BC, Porphyry. Fireweed Zinc, Bluestone, all making great waves in the market these days. So it's an honor to be amongst those in the group. And what we'll do next is tell you a little bit about the capital structure at Valore and a bit about the team. We have an ongoing financing right now, so we're pro forma, about 140 million shares out. We're trading at around a 3-year high at the moment, and tell you a little about why that is in a couple slides, but we're led by strong insider ownership, over 20% of the company, and very strong team with a proven track record for deploying exploration dollars effectively, and also, as you can see on the right, a lot of pretty impressive transactions within the group over the past few years. Valore is actually a spin-off from Camnack Gold, who was acquired by Gold Corp, the Coffee gold deposit in Yukon for $500 million there. So very exciting, very, very strong insider ownership, and you know, a track record for proven deals. So here's a quick summary of our project portfolio. As you can see, there's a focus on uranium exploration in Canada, as well as a PGE project in Brazil. So we do have as well a district scale gold play on Baffin Island, but the two core assets as it stands now are Angelac uranium and Pedra Branca PGE project. So you can see those two assets are similar in the sense that they're large land packages. They both have fairly current 43-101 resources. They both have significant historical expenditure as well as Valore expenditure, and we're both actively working these projects. So what I'll do first is focus on Pedra Branca in Brazil, and we'll zip up to Angelac after that. So Pedra Branca is located in northeastern Brazil in the state of Ceará, and you fly into the capital city of Fortaleza, which is population about 3 million people, deepwater port, brand new international airport. And then it's paved highways go right to the site from Fortaleza. So you have your choice of two. These highways actually carry on right to Brasilia. And as you can see in the top right there, we base our project operations in a beautiful small village of Capital Mor, population of a little over, well, you'd think it's less, but 900 people. And very well situated for infrastructure there. There's lots of electrical lines throughout the project area. The access is excellent. As you can see, it's not rainforest. It's very, very arid, dry terrain. And so no concerns environmentally. And it's extensively developed with respect to agriculture. So, and the other thing is that we've fostered a very positive relationship with the local communities. They work with us intimately. And so we're very grateful to have their support, of course. So the project area is large, as I said, over 55,000 hectares, and this encompasses 70 kilometers or over 70 kilometers of prospective geological trend known as the Troy Unit, which is an Archean mafic to ultramafic belt, which hosts all the PGE deposits and mineralization at Pedra Branca. As you can see as well, extensive historical spend, namely by majors such as Anglo American Platinum. They were with the project for about 11 years and spent the lion's share of the $35 million. You may ask why they're not still there. At the time, they were really looking for a project that would significantly offset ounces coming out of the Bushveld. So their internal hurdle was about 15 million ounces. They moved on from the project, and what that meant for us is they left a highly developed but underutilized data set. For example, they flew property-wide airborne geophysics in 2013. They wouldn't even look at an anomaly that was less than 4 kilometers in size. So they left a lot of fruit on the tree for an explorationist group like ourselves. And the bonus as well, working in Brazil, it's highly cost-effective exploration. We're all in at about $140 a meter, everything in. So we're really able to drill a lot on not a whole lot of capital and advance things very efficiently in that sense. First thing we did when we picked up Pedra Branca was calculate a Maven 43-101 resource. As you can see, it's a little over 1 million ounces, 2 PGE plus gold. That's palladium plus platinum plus gold, just a straight summation, no equivalence there. It's about a 2-to-1 palladium to platinum ratio. And as you can see, there is significant expansion potential. I'll show you a couple slides on that coming up here. But one of the things we really liked about the resources, these things are at surface. The deposit you're looking at here in 3D view, this is the Esparro deposit. It's about 400,000 of the million ounces, and this thing is fully at surface. The strip is essentially zero, and we drilled this thing this year for resource continuity, but also for metallurgical sample. And you can see some of the intervals on the right-hand side, 77 meters of just shy of 3 grams from surface, and that was fairly consistent across the ore body. I mean, you know, you're literally walking on mineralization from tip to tip. And it's the same case at all the other deposits as well. They're tabular sort of ore bodies. They're generally very shallowly dipping. And in the case of Esparro, it dips sympathetic with the topography, so the strip is very, very low. Now, the drilling we've done, as you'll see in the next slide, has focused about half on resource expansion. So we nominated and identified Santo Amaro and Trapia as having the most potential in that front. Curuyu, Cedro, and Esparro are quite well constrained. They're within about 5 kilometers of each other, and they've been drilled the most. But we saw a lot of upside in the other two. So what you're looking at here is the plan maps, all the same scale, and within the black dashed lines are the drill holes which comprise the 2019 43-101 resource estimate. Everything else you see outside the lines, those are holes that we have drilled in the last 2 years, and they're coded by gram meters. So, you know, the bigger the dot, the more red it is, the better the hole. And as you can see, there's great upside at all these target areas. We're working towards a recalc in Q1 of next year. So, you know, lots of exciting potential on this for sure. We will now zip our coats up and put our toques on and head way north to the Angelac uranium project in Nunavut. This is, much like Pedra Branca, this is a district scale exploration project with upside for uranium, precious metals, and base metals. It hosts the LAC 50 trend deposits, which there's an inferred resource estimate on NF 4301, and highly explorable, highly expandable, and as you can see, it's a high-grade resource. It's the highest outside the Athabasca, and it is one of the highest on a global basis as well. So just over 43 million pounds at 0.69% U3O8. It's denoted by the large red stars in the map on the left there, and the pre-resource targets in which we've drilled, we've hit resource-style uranium on parallel analogous-looking conductors. Those are in the small stars. So as you can see, there's huge expansion potential, and it's going to be a big focus for us in the next couple of years here. We spent over $55 million advancing this project. Most of that's on drilling. Obviously, the cost per meter is a few bucks more in Nunavut versus Brazil, but we've also done metallurgy, and metallurgy is very favorable, very great recoveries, and beneficiation is very, very positive as well. So I'll tell you a little bit about what we're going to be doing with Angelac, but before that, quick granular look at the resource, 3D block models here on the right. And as you can see, it's very well constrained, over 330 holes, over 60 kilometers of drilling into the thing. You can see there's extensive openness left within the existing resource, both down plunge but along strike. And as I mentioned before, there's a lot of pre-resource targets in what we've drilled, we've hit. They just lack the current drill density required for a resource at this stage. So obviously a big focus for us in the coming programs. So how are we going to make that number grow, and how are we going to advance this project? Well, we are engaged right now in a district-wide targeting review. And so what we're doing is we're reprocessing the entire geophysical database, entire geochemical database, and we're adding to it high-quality worldview spectral data. A lot of buzzwords on there, panchromatic, Vernier, Sweer, all that stuff. But basically, what this allows us to do is to zoom in on outcrops of mineralization, prospective alteration, even uraniferous boulders, down to a scale of 30 centimeters, and take a spectral fingerprint of that rock, that material. Then we scan the whole data set, and it gives us a whole bunch of anomalies. So you'd never want to use this data set as a standalone data set because it gives you so much, but when you combine it with geochemistry, geophysics, even drilling data, it's a very compelling data set to use. And it's something we've used at Pedra Branca and had great success with, and so we'll be applying that to Angelac as well. As mentioned before, we have spent over $55 million exploring this thing, so we have a lot of great data to use. So we're reprocessing both the geochemical and geophysical data sets. And to support this targeting initiative, we have an ongoing financing whereby next week we should have about $11 million in the bank to allocate to Angelac next year. So exciting times for the project. And without further ado, yeah, I mean, these are the catalysts for growth this year. We have 2 drills still spinning at Pedra Branca as we speak. We're closing in on the end of a 10,000 meter drill program from this year. We drilled about 6,000 meters last year, and all this is working towards a resource recalc in the first quarter of 2022. We have a MET program going at ALS at Kamloops right now for Pedra Branca, and we should leave the year with about 1.2 million in the treasury. At Angelac, as I said, we're reprocessing major data sets, geophysics, geochemistry. We've added to it worldview spectral data, and all this will be applied next year as we finish the financing next week. 11 million bucks in the bank, and that'll be deployed at Angelac that next year to grow the resource and advance that project. So thanks very much for listening, and thanks for having me, Gwen.
Thanks, Colin. And that wraps our first session. We will be moving, those of us on stage here will be moving just next door to the Q&A room. So certainly head on over there. I have some questions, and I'm happy to incorporate questions from all of you to pester them further on their plans. Otherwise, head on out. There's coffee. There's lots of people to talk to, and we'll reconvene here after the break.
Thanks. Good morning, ladies and gentlemen. Welcome to the second speaking block of the first day of the first MIF in 18 months, where we're not staring at each other through a Zoom screen. It's nice to see people again in person. Nice to be able to hand out some drinks later. And looks like the timing's good. I mean, as the title of my presentation says, I mean, I think we got a very good setup here. I mean, it's the market, always anything can happen, but it looks to me like we're going to have a pretty good time here for the next few months. I don't see anything obvious that's going to derail things. And, you know, it's interesting because it wasn't very long ago, in fact, it was about a week ago, when everybody was hating on gold and there's no catalyst, there's nothing going to turn around. I've been saying to subscribers for a little while now that I thought the bottom, or a bottom, I suppose, would be the taper announcement. And the reason for that really was that through the last 3 or 4 months, really ever since the FOMC members started talking taper at every opportunity, every time a macro reading came out, or there's anything that the market could construe as a reason to harden their decision to taper, you would see a big dump in the gold price. And we saw like 5 of those in the last 3 months. You know, one of them was in one of the inflation readings. One of them was a non-farm payroll. There were 3 or 4 different things, and there'd been enough of that I just, you know, to my mind, I felt it pretty much had to be priced in. I mean, I know there's a certain subset of gold bugs that are like, there's never going to be taper, there's never going to be rate increases, but I think the market in general and the majority of traders in the gold market were resigned to the fact, 1, that there was going to be a taper announcement, and 2, that it was going to be this month, and in fact, it was. You know, now that I've seen gold not only react well to that, it reacted very well to the non-farm payrolls last Friday, which could have gone the other way for sure, because the consensus was 400, it came in at 550. Any number of months earlier this year, when you saw that kind of a beat on the payroll number, gold got whacked. It basically went up this time. Even the day of the taper announcement, it actually dropped before the taper because of some PMI numbers. The taper announcement was actually after it had come off the bottom, and it went up $15 after the taper was announced. So I think right now we're very well set up. I'm very happy to see the way gold's trading. It's trading in a market where it should actually have more headwinds than it does right now. I mean, if you take a look at what, I'm just going to move to the next slide here, just so we've got our timelines. I've got the arrow there pointing, that's basically when the taper announcement was, where I've got that arrow going. And interestingly enough, the taper announcement and then PPI numbers a couple of days ago, CPI numbers yesterday, you take all of those numbers in the market of September or August or March, gold would have gotten whacked on all of those days. And in fact, gold isn't just trading well because the things it often trades against trade badly. And to give you an example, there's 2 charts here on top of each other. The top one's a gold chart, bottom one's a US dollar chart. It's a truism that gold trades against the dollar, it trades as a currency. A lot of people in the gold market, the main reason for gold doing anything is US dollar. I'm not one of those people. I don't think that's the main reason. I've pointed out for years that the correlation between gold and the dollar actually shifts all the time. And this chart's a good example. If you look at sort of the middle of this year, there's a very obvious negative correlation between gold and the US dollar there. US dollar's dropping, gold's going up. Dollar goes back up, gold drops. If you look at the right side of the chart, there's actually not much correlation. And in fact, yesterday, the dollar was really, really strong. The dollar had the best day it's had for, you know, months and months and months. And gold went up $20 with it. I mean, that's a very good sign. When I see that, when I see gold starting to move and I see it moving with the dollar, with yields, to me, that's a very, very bullish sign. Same thing goes here. This is sort of reprise of the previous one, except this one, instead of being the dollar on the bottom, it's TNX, the 10-year yield. And again, it's a little more subtle with the yield chart because it's real yields that matter, not nominal ones, and these are nominal yields. But you can see it, you know, generally the negative correlation when yields were rising early this year, gold was dropping, vice versa through the spring. But again, if you look at the right side of the chart, I didn't circle it, but you can see, you know, when CPI came out, when PPI and then CPI came out, it was pretty strong sell off for bonds. I mean, the 10-year yield went up about 12 basis points in like half an hour. And gold basically went right up with it. It really didn't hold the gold back at all. And on any given day before 2 weeks ago, gold would have just gotten creamed if the bond market had done that. You would have seen gold drop 50, 60 bucks easily. So all of these are all very, very positive signs. And this is I couldn't find a short-term chart that I like to look at, so I kind of had to fall back on a long-term one. Again, this is like a 10-year chart. Top one's gold. Bottom one is a 10-year TIPS yield. The TIPS yield is essentially it's the equivalent of a bet on real interest rates as opposed to nominal interest rates. That's why you see it go negative in some spots. And if you look on the right side of the chart there is a pretty strong dip. And the reason for that dip, basically real yields are made up of two components. One is a nominal yield, the other is the inflation rate. So what happened a couple of days ago was CPI printed really strong, 0.9% month over month. And again, normally the market would have just shit the bed with that kind of a reading. And the reason why it didn't, and the reason why gold held up this time, was because I think bond traders and probably gold traders both have kind of shifted their mindset to, earlier this year it was the taper's coming, inflation's going up, the Fed doesn't have any choice, there's going to be rate increase after rate increase after rate increase, and people were thinking that, and they're buying dollars, selling bonds, selling gold. I think it's got to the point now where you're still seeing them sell bonds because bond traders are definitely starting to take the, long-term inflation as opposed to temporary inflation more seriously. But I think they're also saying to themselves now, there's so much differential between nominal rates and inflation now, there is no way in hell the Fed gets ahead of this. They cannot get ahead of this. They're not taking rates to 6 or 7%. The Wall Street would implode if they did that. And I think they gave that message in the last Fed meeting on the 3rd of November when instead of focusing on inflation, I mean, they did the usual, yeah, we think it's transitory. I think it's partially transitory too. I think inflation will ease off a bit next year. But what they really focused on was their unemployment target. And they reiterated several times, our unemployment rate target is 2%, which I think is the FOMC saying we're going to have to be dragged kicking and screaming into raising rates next year. And interestingly, right now, I guess they look big enough on here. There's a couple of things that I want to point out here. I mean, this is a CPI reading that really helped really move things. Part of the reason why bond traders are getting paranoid is the chart on the left. Basically, that is the percentage of this. Every CPI number is made up of about 28 components. That is basically what percentage of the components came in above 4% inflation. So if you see the way that really ramped up in the last 4 or 5 months, basically that means inflation's broadening. It's not just used cars. It's not just shipping containers. It's broadened out. So it's a lot more likely that at least some of this is not going to be transitory. It's going to be here for a while. And you can see the way that bond traders reacted to that change. The bottom chart on the left, that's basically a calculation from the bond market that tells you what bond traders are pricing in, what they think the Fed's going to do next year. Right now, they're pricing in like over 80% odds of 3 rate increases next year from the Fed. The Fed is not talking about 3 rate increases. There's nobody on the FOMC saying we're going to raise rates 3 times next year. And ironically, that's probably another tailwind actually for the gold market because bond traders right now are probably being overly hawkish. I mean, certainly when I listened to Jay Powell on November 3rd, he was going out of his way to say, look, the metric I'm looking at is 2% unemployment, and we're nowhere near 2% unemployment in the States. And he basically also said we aren't even thinking about raising rates until we finish the taper, which is the middle of next year. So I think the Fed is trying to send a message there aren't going to be more than 1 or 2 rate increases. The bond market is already pricing in 3. That actually, to my mind, increases the odds that you've got this buffer that's going to help keep the real interest rates lower for longer. And for gold and for commodities in general, that's the name of the game for me. Negative real interest rates, stuff goes up. It's not, there's no need to overthink it. So basically, none of what's on this page is going to be new to you guys, I don't think. No, they've broken out decisively. Every chart, I'm not really a chart guy. Every chart guy I know, it's above the levels any of them are using as a downtrend line. That was an 18-month downtrend. It's very decisively broken out through that. Are we happy yet? Of course not. We're gold investors. We're never happy. We're all masochists. I think what we'd all like to see, and I'm hoping we will see, I'm not saying it'll happen tomorrow or next week, is gold getting back to that sort of 1900, 1920 level, because that's like a really done deal, definitive breakout above last year's levels. And if it goes through that, I don't even know what the target is after that, but it's somewhere probably well above 2000. And keep in mind, I'm not a gold bug. I'm just telling you what the chart says to me. And again, the driver here is real interest rates, not nominal interest rates, real inflation-adjusted interest rates. But keep in mind that bond traders and gold traders, they don't just look at absolute levels, they look at changes. And the real interest rate can move up and down based on what the inflation curve is doing and what CPI is doing. If CPI drops 1%, real yields go up 1% because that's all it is. It's nominal yields minus inflation. So that is going to bounce around. So I'm not saying this is going to be like a straight shot upwards. I'm sure we're going to have drawdowns now and then when you see real rates bounce up because of what CPI is doing. But I think we've got a very nice opening for a fairly long, long-term rise here. I mean, I could see this going through year end, and I think if it gets through year end, it probably goes through Q1 as well, because Q1's generally good for these kind of stocks anyway. Gold producers, I've had a lot of people ask me, like, why aren't the gold miners trading better? I mean, they're starting to trade better now, but the truth of the matter is, most of them didn't put up great Q3 numbers. By and large, they came in a little bit under consensus. And the main reason or the main excuse, whatever you want to call it, that they gave was cost, because inflation affects them like anybody else. And one big mover in the last quarter, of course, was energy prices. And mining is very, very energy intensive. So when oil goes up 30 or 40 bucks a barrel, it hurts if you're a miner, because it's a very, very energy intensive business. So that raised their costs. But I think we're probably through the worst of that. Gold looks like it's heading through 1900 again. I would think Q4 is going to be pretty good. And I don't think a lot of the generalists that, they don't really look at the mining sector. And gold miners have a well-earned, let's be honest, reputation for doing deals at the top of markets and having horrible balance sheets and stuff, but that's not really the case anymore. Gold miners as a group, I think, probably have the best free cash flow of any sector in the market right now. Any sector in the market. I think financials might be better, banks, that's it. All the other sectors everybody's going crazy for, they look like crap compared to the gold sector when it comes to free cash flow. It's just most of the market hasn't figured that out yet. But I think of these guys, and most of them are racking up a lot of cash, so I think you'll start seeing all of them doing things like raising dividends and stuff. And that's, I think, what'll bring in the attention and get more of the generalists who come in looking for yield. And, ironically, we've all been moaning about assay labs all year, all last year, all this year, hopefully not all next year. I mean, everybody's been in assay lab hell. I guarantee you every guy at this table was talking about doing MIF a couple of months ago, firmly under the belief that he'd have a whole raft of drill results to wave around. Not so much, just didn't happen. But ironically, that may actually work in our favor for once, because we're actually getting a big sentiment improvement ahead of the assays this time, because we're only going to start seeing guys putting out assays from summer programs in the next couple of weeks. So weirdly, as weird as it sounds, I think the timing's actually going to work for us this time, because we're getting a sentiment shift, and then we're going to, all of those assays that normally would have been September to December are now November to April. So that's the other reason why I think we probably got a pretty decent run ahead of us. That slide should not even be there anymore. This is just, I'm not going to spend a huge amount of time on base metals, even though a lot of the guys sitting to my right are base metals. Sorry, boys. I was concerned, and I'm still a bit concerned about China. China's just such an enigma when it comes to economy. You can't really trust any economic numbers out of there. Xi's got the place completely under control. He's much more autocratic than, Jesus, I don't think Mao was as autocratic as Xi is. And Xi is doing what I think is the right things and what he has to do. He is serious about trying to deal with things like pollution. I think he's serious about trying to deal with the debt bubble, although I don't think he's figured out how to do it. I mean, we've all seen these scares, this property developer, that property developer, missing bond payments. You know, there's going to be a bunch of bankruptcies, but so far, it's really not impacting metals that much. I mean, China's kind of the 800-pound gorilla when it comes to base metals. And really, you look at these 4 charts, charts are as of yesterday. There really wasn't much pullback. I mean, zinc had a bit of one, but that was just a spike. I mean, that's what a chart does when it spikes. But you look at copper. I mean, I was getting nervous and copper pulled back a couple of months ago, but it's, you know, it's pretty much back up near its high. Anything that's electrification metal or a battery metal, I mean, nickel's strong. And really, at the end of the day, it comes down to the fact that we're in the era of endless permitting cycles, ESG, NIMBY, which has always been there, but there's a lot more NIMBY to go around than there used to be. You put all those things together, and it simply takes a longer and longer and longer to get something through development and into production. We're simply not in a world anymore where miners can flip a switch. And interestingly, even with, you know, the other side of the, you know, the supply constraints that we've had this year across all industries, and one big constraint there has been in China, there's been 2 things that they've been doing. One is, you know, pollution. There's some of the smelters are just so nasty, they've just ordered them closed. But even a lot of the other ones have had occasional temporary shutdowns because they're basically against the wall when it comes to the capacity of their grid. They just can't build power stations fast enough. So that means even though you still got, say, copper miners, zinc miners, you do have a bottleneck now at the smelter level, and you've got a bottleneck at the shipping level. So you take those things together, and I didn't bother putting them up, but if you go and pull up the warehouse inventory charts for all of those metals, they're all going upper left, lower right. None of them have bottomed out. They continue to drop. And that's the kind of background where I don't really see a lot of weakness in base metals anytime soon, unless something, you know, and so something really goes sideways to the economy in general. There's simply too much supply constraint. There's too little inventory. You know, I think there's a lot of people in all of these metal markets that are going to be quite happy to buy the dip, if anything's dip, because nobody's really got anything in their warehouses. So this is a very, very busy slide, but it's just a summation slide. I'm just going to run through it. You know, nothing's for sure. Obviously, the market's a market. Things can always go sideways. But really, this is as good a setup as we've had for, you know, I said early last year, but it's probably been several years, and you can make the argument this is the best environment we've had in several years. You know, have at it. I think we're going to have a very good run here for the next few months. I don't think we're seeing much generalist money yet. I haven't seen very many, you know, there's none of the metals funds or the gold funds, none of them are talking about enlarged assets under management yet. There was a lot of drawdown earlier this year, all the gold funds and stuff. I don't think we've seen new money come in yet, but we will. I think that's going to happen very quickly now that things have really started to move. But the generalist money, they tend to be, you know, they're by the top guys. You know, when does generalists come into a metals market? Generally, it's when it hits an all-time high. That's just how they look at the world. But happily for us, you've got guys that'll pay $850 million for a emoji. So, you know, who the hell cares if you throw $50 million at a gold stock? Cheap. I do think the broadening of inflation is real. I mean, you know, the numbers are there, but I'm not really an inflationista. I do think a lot of it's going to moderate. I think a lot of this is supply chain issues. They're not getting fixed fast, but ultimately they will get fixed. So, I mean, you know, I'll be surprised if we don't see inflation sort of draw down back to, say, the 3 or 4% level by the time we're well into next year. The consumer confidence is doing a lot better than I thought it would. I think there's 2 things for that. Lots of people have been getting checks from the government here, there, and everywhere. Plus, Wall Street is so strong, and Wall Street and the wealth effect that you get from high equity prices, that has a very direct correlation to high consumer confidence. Consumer confidence is high right now. Most of the recent surveys I've seen, buying expectations where I was surprised how strong they were. How many people are planning to buy, you know, new appliances, new houses, new cars, new whatever. But just keep in mind with that, though, is that's something that turns on a dime. I mean, the last time I saw numbers like this was before the shit hit the fan in 2008. In that case, it was real estate prices that was creating the wealth effect. And this time it's, you know, stocks and crypto, I guess, doing it. But I don't see, that said, I don't see an obvious bear market catalyst out there. There's nothing out there that's freaking me out. The one thing I am keeping half an eye on, you know, I'm not an inflationista, which means I'm not a stagflationista either. But that is something we're going to have to keep an eye on going forward. I mean, yeah, a lot of industry groups, there's a lot of hand-wringing and wailing and moaning about wage increases and stuff. But if you look at where the CPI has done the last few months, wage increases are not getting ahead of CPI. I mean, people's real purchasing power is dropping, you know, your average wage earner. And you go back to the 70s and you think about the stagflation and these short, choppy cycles and overall low growth. That's really what created it was the average person couldn't get ahead of the inflation and their purchasing power just got worse year after year after year. And that's a lot of what drove, you know, the term growth during that period being like 2.5% instead of 4.5%. You know, that's something we have to keep an eye on. Because I'm not that worried about long-term inflation, I don't really expect it, but it's something we all have to keep half an eye on. But then the one thing with that is, if we do go into the stagflation, a lot of people are talking about, those aren't short cycles. We'll get lots of notice. We'll see it happening all the way through. It'll develop over 4 or 5 quarters, so it won't be somewhere you wake up one day and it's happened. Like, we'll all see it coming if that's what it is. But even if that happens, if you go back to the 70s, I was actually alive then, unlike all of you, and actually working at mine sites. That was a pretty good decade for commodities by and large, because you also had that negative interest rate regime. I mean, the 70s was of course when gold really had its first big bull market, but even base metals did quite well then. Commodities in general, oil obviously did fantastic in the 70s. So even if that's what we get, I think we're going to be one of the premier sectors over the next few years. But shorter term, I just think we're going to have a lot of fun, and the next 2 months, 4 months, 5 months, we're all going to be making pretty good money. So we should just enjoy it and pat ourselves on the back for being clever enough not to get out when everything fell apart. So, yay us. Okay, that's all I got to say today, so I'm going to move on to the regularly scheduled programming. I'm going to start with Altaley Mining. Ralph Shearing, CEO, is going to walk you through it. As I'm sure you all know, any of the company that's up here, they're a company I follow. I really like Altaley because, you know, you saw the zinc chart. They're predominantly a zinc producer at their Campo Morado mine, but they will have a gold mine going in production about a month and a half or so, give or take 2 months. I just think they're going to do very well as a revenue growth and profit growth story over the next few months. And the timing is very good for Ralph to tell us. I think you just came back from Campo, didn't you?
Yeah, I just got back.
Give us a...
Campo Morado was a site visit with Jen Lynn and an analyst, and I came back from Television.
Okay. Give us a lowdown. Ralph Shearing. You don't want the pointer, do you? Kind of useless.
Yeah,
The other, this one's the pointer,
okay.
if you want it.
Yeah, sometimes I'll need it,
Okay.
but, okay. Thank you, everybody. Eric, nice introduction. So I just got back from a site visit on Tabahueto, the mine we're building, and we are building Mexico's next mid-tier mining company. As this slide shows you, 2 mines. One is Campo Morado. This was a Hunter Dickinson project that Nearstar purchased. We purchased it from Nearstar a few years back and put it back into production and are making good money. That's on the right-hand side. On the left-hand side is our Tabahueto project. This is a epithermal gold system. We're building a mine right now, a 1,000 ton a day operation, and should be up in operation near the end of this year. Forward-looking statements. Obviously, everyone here is talking about forward-looking performance, so you can read that at your leisure. So Tabahueto is up in northwestern Durango, shown there. Both of these projects we own 100%. Campo Morado is down in the state of Guerrero. Tabahueto is going to be an excellent mine. Average gold payable on an annual basis, 25,000 ounces. Silver, about 400,000 ounces. We'll be producing base metals as well, so on a gold equivalent basis with all metals, should be around 40 to 45,000 ounces on an annual basis. Our current reserves gives us a 9 or 10-year mine life. We have excellent exploration potential. We have M&I resources that could extend that life to 20 years, and we believe we can really grow this project over the next 2 to 3 years, double or triple the size of what we're building right now. At Campo Morado, this is a VMS, volcanogenic massive sulfide deposit. It's had production in the past with Farallon Mining, Near Star. We brought it back into production and are doing quite well there right now. It's currently the 6th largest zinc producer in Mexico. We have producing around 2,000 tons, 2,200 tons per day on an average basis. We produced 21 million pounds of zinc in the first half of this year. We're on track to produce over 33 million pounds of zinc throughout the rest of this year. Low all-in sustaining costs. We've got the project producing very well. We've dropped down our cost. We're producing all-in sustaining costs at about 77 cents per zinc equivalent pound. That was achieved in Q2. We're getting ready to release our Q3 numbers, and they should be similar. Project costs, 48 cents per pound just for the project costs, C1 cash costs. So this is becoming, with current prices of base metals and especially zinc, this is becoming a very profitable mine, and we're making probably $2 million on a monthly basis moving forward, and we expect to continue that throughout the rest of this year. We have a 7-year life in our current mine plan, but the M&I resources in this project are well over 20 years mine life. So stable and growing cash flow, so the highlights that we are showing people now, generate, as I said, $2.1 million in EBITDA on a monthly basis. We have a pathway to increase production at this mine by bringing on a flotation circuit that was 80% complete from the previous owners. So we think we could get it up to 3,000 tons per day if we go that way. And we're exploring a lot of process improvements to increase the metallurgical recoveries at Campo Morado. Campo Morado is a challenging volcanogenic massive sulfide deposit in that precious metal recoveries are low, but we believe that we have a pathway to really increase those based on previous testing from the former owners of the mine. Exploration potential, Campo Morado is very good. If we get healthy enough and can start drilling again, we expect to double our resources, and maybe we can build this mine and increase the size of it to 5,000 tons a day. It's a long-term approach. This would be over a 5-year goal, but we would like to try and get there. It just requires us to drill. At Tabahueto, construction on this project is over 80% complete now. We expect to have it up and running near the end of this year, starting with one ball mill, around 500 tons per day, bring the second ball mill online in the first quarter of next year, and then start to ramp the mine up to commercial production of 1,000 tons per day, anticipated Q3 to 4 of next year. But we will be in production near the end of this year, initial pre-production. Revenue from this project is, Tabahueto is 70% of the revenue will be from gold, 12% from silver, and the rest from base metals. And here we have a very good pathway to increase our resources and reserves. And I believe we can double the size of this project in 2 to 3 years and maybe triple the size of it in a 5-year time frame. We simply need to start drilling again, and the exploration results will come in fast and furious. So once we get Tabahueto up and running, we would expect to have a re-rating as a precious metal producer. Right now we're rated as a zinc producer, but Tabahueto will double our revenues and will get us to the threshold to be deemed to be a precious metal producer because of the high gold content at that mine. Currently, we're trading about 1.6 times enterprise value over EBITDA. That's a strong discount to all of our peers that are operating in Mexico these days. So we really believe we can get this company turned around, bringing Tabahueto into production. Strengthened management team. We've a very strong management team, a lot of new directors came on board. I won't spend a lot of time on this because we are short in time here, but I'd like to point out David Rhodes. David Rhodes is our chairman of the board. He's the managing director of Endeavour Financial out of the UK. Endeavour Financial has raised billions of dollars for mining companies. We've hired that group as our advisor, and David is our chairman of the board. Mark Bailey, a lot of you might know Mark Bailey. He was operated, founder of Mine Finders in Mexico. He's now retired, but giving us lots of good help. And then over on the other side, I'll just quickly touch on Ruben Alvidrez. Ruben Alvidrez is from a very strong, prominent mining family in Mexico. His brother is the CEO of Fresnillo, and his father, now retired, was a senior officer of Peñoles. So Ruben has been a great help to us with his contacts in getting contractors for our Tawato construction. A very good team. Down at the bottom, we've recently brought on Armando Alexandri. He is a mine builder in Mexico, lots of experience in building and operating mines. So a very good, strong team, and this should help us avoid any future difficulties moving forward. Stop at outline Tawato very quickly. So Tawato is a big epithermal system. This is our resources, probable reserves of about 3.2 million tons, a high-grade gold content of 3.4 grams per ton gold. This will make us one of the 3 to 4 top highest grade gold producers in Mexico once we're in operation at Campo Morado. We have 41 silver plus base metals, and that's in the reserves. That gives us a 10-year mine life, and the M&I resources would double that. The reserves are included in the M&I resources there, but that could give us up to 20 years at 1,000 tons per day. So we already have the ability to investigate the possibility of expanding the size of this mine from 1,000 to 2,000 tons per day. As I mentioned before, 42,000 ounces of gold equivalent on an annual basis, 25,000 of that will be gold, and we believe this will be a very low cost underground mine at around $800 per gold equivalent ounce for production. A few pictures to show our construction. So we're really getting quite advanced. The ball mill's in place, the first one. Over in the camp, down in the lower area is the filtration and the mill in the middle. That mill you see in the middle is actually on the Metals Investors magazine that has been handed out to guests at the conference here. This is the project. So Tawato is a large epithermal system. It's, as we know it right now, it's about 12 kilometers long, the overall district, by 8 kilometers wide. We own probably around 83% of the prospective ground within that district. Our only competitor is Fresnillo, has a sliver of ground around that internal block of concessions you see there. The red line indicates the only area that we've really drilled and contains resources and reserves. The yellow lines represent other known structures, veins that need to be explored. We have drilled 6 holes on that Texcalama zone, and we've hit similar mineralizations we see along our major structure. That major structure has only been explored between Cinco de Mayo down in the valley up to Santiago over the other side of the hill. You'll see there's a gap in between that line. There's an overlying cover. We couldn't drill there. I believe that area could bring in another third to our resource potential by getting underground and drilling that. It's too difficult to drill from surface. That structure goes all the way down into the Arroyo. That's about a 3.4 kilometer distance between Cinco de Mayo to the Arroyo. And I believe it also continues to the south underneath that overlying cover rock, potentially another 2 to 3 kilometers to the south. That would give that structure over 7 kilometers, over about 6 kilometers potential strike length. The district itself we have mineralization over 7.5 kilometers in various veins. So lots of potential here. Next slide will be a longitudinal section along that red line I just outlined. So that's what the ore bodies look like at this point in time. If they're outlined in that little blue color, that's a reserve. Where they're not outlined, it's a resource. So from here, you can see we've got some infill drilling to do to increase the confidence in the M&I to try and bring that into a reserve. But between the zone Preston and Santiago, you see that's the area we have not been able to drill because of overlying cover. Our plan will be to develop underground through to the Santiago zone and start drilling that area. And that should bring in a lot more resources, reserves, potentially a third to what we have now, in my opinion. And below, we still have not found the limits of the mineralization. They're simply too costly to drill below this area at this point in time. So our deepest hole is about 450 meters underneath the 14 zone and hit ore grade mineralization, but isn't in the resources. That intersection's too far away. So lots and lots of potential to increase reserves and resources along this one structure and all of the previous structures I just showed you to go after on the project as we get ourselves up with more cash flow and able to start drilling again. Quickly into Campo Morado. This is the 6th largest zinc producer in Mexico. That's the mill you saw there. M&I resources here, there's never been a reserve because the former owner was Nearstar and never had to publish a 43-101 report. However, M&I resource is 16.6 million tons at a fairly high-grade gold content of 1.7 and high-grade silver. Problem is here, we only get about 20%. We've increased the precious metal gold recoveries from 15 to 20% recently, and we've increased silver recoveries from the 40 to the 50% recovery. Still not very good. So we have a lot of work to do, and we are actually working on a very extensive metallurgical testing program to try to increase those. Here we have a 20-year mine life, 77 cents per pound all-in sustaining cost for zinc equivalent, and on a $2.2 million on a monthly basis in EBITDA over the first 6 months of this year. Photos, tailings facility being expanded in the lower left. I'd like to draw your attention to the lower middle slide. There's a yellow flotation circuit there. That flotation circuit was 80% complete in its construction with the former owners, and we have the ability to bring that back or put that into production, which would increase our capacity by 1,000 tons per day. So we could be potentially producing around 3,000 tons per day. But there may be a better way to increase the production capacity at this mine. And that is, in the next 2 slides I'll show you. Strong production growth at Campo Morado. The histogram in green shows the production over the last several quarters, steadily increased revenues, increased our production level. We're flattening out over on the right-hand histograms at 2,000 tons per day. We don't see a lot more increase in tonnage. However, the zinc prices, base metal prices have been increasing steadily, so we have a lot of ability to continue to bring in more revenue. So when I mentioned that flotation circuit, you can see it up here on the left-hand side. That's one we can increase production by 1,000 tons per day. And all we would need to do is do another engineering study and look at that and see whether it makes sense. However, there's been some previous testing on increasing gold recoveries, leach ox process, Albion process, which is a forced oxidation and leaching. It's gone through first phase testing at Campo Morado with excellent results. So you can see here, the leach ox testing has increased precious metal recoveries up to for gold up to 61%, and for silver up to 81%. This has gone through first phase testing with excellent results by the previous owners. We want to take that through second phase testing. In addition, we're investigating pneumatic flotation, which is a flotation method that's designed for microfine grinding, and it does a better job to recover metals at microfine grind levels. So we're testing that now. We have one pilot plant on site. It's the Imaflot flotation pilot plant. It's been in testing for about a month and a half, and then we're bringing on a Jameson cell. We're going to test that. The theory here is that if we can make these work, that we can increase our base metal recoveries, and in doing that, we'll increase our precious metal recoveries substantially. So we get about 70% recoveries of zinc, we get about 40% recoveries of lead, and we're going to start to produce a copper concentrate next year. We have not been doing that. So if this pneumatic flotation works, we would expect better increase in recoveries. As well, we're testing the ability to produce a gold-rich pyrite concentrate that we could either sell or that we could reduce the mass of the tailings by making a pyrite concentrate and doing a forced oxidation and leaching with that technology. We expect to be able to really recover a lot more of our precious metals. This is a process that's going to take us several more months, maybe 3 to 4 or 5 months to get through. But if it works, then we will be able to really turn Campo Morado into more precious metals and increase base metals and absorb any downward trends in zinc prices which aren't on the horizon or the near horizon, but it would make this mine much, much more profitable in lower base metal environments. So if that leach ox testing or precious Albion process testing, either one of those works, then we have the ability to reprocess the existing tailings facility, and that has over 280,000 ounces. This is not 43-101 compliant. This is based off of previous production records. We have all the daily production records. We know the grades going into the tailings, the tonnages going into the tailings. We've calculated 280,000 ounces of gold equivalent with just gold and silver within the tailings, so that could be another revenue source, assuming that the forced oxidation leaching technology works. Near-term growth potential at Tabahueto for exploration. Excellent project, lots of targets to go after, and we believe that with exploration success, we can have further increases and expansions. This shows you some of the exploration potential. The lower image shows the existing ore bodies as we know them. Underneath them, there's a lot of borehole geophysical targets. These were all from the previous owner. They're drill ready. All we need to do is set up and start drilling from underground. And in fact, the previous owner did drill some holes and intersected decent intersections of thick, massive sulfide zones. So those need to be followed up, and we would hope to develop new ore bodies underneath these existing ore bodies. And then on a property scale basis, what I just showed you was just within that little blue ellipse. The rest of the the rest of these ellipses represent geophysical, geochemical anomalies that need to be drilled. They're drill ready. And once again, when we're healthy enough to start drilling again, we expect to be able to bring in new massive sulfide bodies outside of the existing ore bodies.
Okay.
Out of time? Okay, sorry everybody. I could go on and on, but
I know.
it's not going to be allowed to.
There is actually a lot to this story, and I own quite a bit of it because I like it a lot. But he's going to be here he'll be here all day, folks, as they say in Vegas. You should get the story because it is a very good story. The next presenter is from another continent, and he's working on a different continent still. Tim Moody is CEO of Pan Global. Pan Global's got a great copper project in the Iberian Pyrite Belt. They've made some great discoveries there. They've had fantastic drilling success, 2 rigs going, and things should start getting a lot more interesting yet very soon because he's got another project next door coming online that's got a ton of really, really nice targets. I love this story. This is a very high confidence hold for me. Tim's done a great job. Take it away, Tim, and tell us when you're going to get that damn Al-Andalus.
Right, thanks, Eric. Yeah, so I'll just give a quick update on our expanding copper discovery in southern Spain. As Eric said, it's in the Iberian Pyrite Belt. But I'll also say why I think we will make additional discoveries in our land package. Forward-looking statements. I think I'll just start by saying that I think Pan Global is well positioned to jump the queue in terms of putting the next copper mine into production. We have near-surface, potentially open-pittable copper mineralisation in an established mining area. So I think we represent a great investment opportunity going forward. So the project is, our main project is the Escacena project. It's located on the eastern end of the Iberian Pyrite Belt. It's the most prolific volcanogenic massive sulfide district in the world. There are 7 large operating mines today with operators such as Lundin, First Quantum and so on. So it's a very active mining area. It has excellent infrastructure. We have sealed road access to our property. Freeport has a smelter about 70 kilometres away, so it's a great area to be developing a new project. So just zooming in on the project area itself, you can see it here outlined in yellow. All of our exploration at the moment is focused just on the little red blob in the bottom at La Romana, which is where we've made our copper and tin discovery. Now this just shows the proximity to some of the other operations in the area. So about 20 kilometres off to the northwest, ATLY are mining a large open pit. It's the site of the original Rio Tinto ore body, probably the world's largest volcanogenic massive sulfide deposit, originally around 2 billion tonnes or thereabouts. Right next door to us, Group of Mexico are looking to restart the Los Frailes mine. Yeah, together, the Aston and Los Frailes deposits represent about 160 million tonnes of ore. And then you've got First Quantum mining the Las Cruces deposit a little bit further to the east, and that was probably one of the highest grade open pit copper mines in the world. So we're very well located. I'll just draw your attention to the area labelled there as Al-Andalus, and as Eric said, that's an area we're expecting to announce that start of work and granting of that area any day now. So that represents a significant milestone for the company when that gets granted. We've got a lot of high priority targets in that area. So just a quick update on La Romana, an overview. We've only tested one target in our project area at this stage, and our first drill holes in that target were discovery holes. You can see hole 2 here, 20 odd metres, about 1.5% copper equivalent, with a nice high-grade section of 7 metres at 2.5% copper, 0.23% tin, some silver, gold and cobalt. So again, importantly, from close to surface, that mineralisation had significant tin, and that's important for a couple of reasons. Firstly, potential commercial value of the tin, but also what it indicates from an exploration perspective as well. High tin in VMS deposits tends to only occur in the very large copper-rich deposits. And two of the best examples of those are Nevis Corvo and Kid Creek. So we've drilled to date, in fact we started hole number 105 today. We've hit mineralisation in every hole so far, so it's a pretty good hit rate. We started our phase 4 drill program this year. We completed 28 holes up until January this year, and we're now, as I said, up to hole number 105. We've now shown copper mineralisation continuous over about 1.1 kilometres of strike east-west, with mineralisation from surface extending to about 350 metres down dip, average thickness a bit over 20 metres. But we do have some much thicker intervals as well. So you can see some of the results here. Hole 40, 50 odd metres at 1% copper equivalent with a high grade section within that. Hole 58, 15 metres at nearly 1.4% copper equivalent, again with some high grade. But we're waiting on a large number of drill holes, at least 25 holes. So about a quarter of all the drilling we've done so far, we're still waiting for results. And we know from what we can see in some of those holes, we've got some very strong mineralisation. So, as Eric mentioned earlier, this backlog of assay results to come in. So a lot of news still to come. We've also got some metallurgical test work underway as well to look forward to towards the end of the year, hopefully. So this is just a plan view showing the area where we've been drilling at La Romana. So we've got the area now, the drill area now spans about 1.3 kilometres east-west, about 350, 400 metres north-south. The mineralisation is open to the west, to the east and down dip. We think it could extend perhaps another 500 metres or so further to the west in the direction of the old La Romana mine workings. The mineralisation in the westernmost holes looks very good, so it's very much alive. This deposit will grow. Going in the other direction, there's some old Exxon IP information which traces the trend another 1.5 kilometres further to the east. So we've got lots of potential here. This is definitely going to grow. A couple of simple cross sections. The mineralisation is remarkably continuous, very predictable, very little in the way of offset by faults or deformation. We hit the mineralisation every time where we expect to hit it, so we're fortunate in that regard. So you see the picture on the left here, a couple of the original discovery holes, hole 2 and hole 5. Good thicknesses, wide zones of high-grade copper mineralisation almost from surface. You can see hole 5 with nearly 30 metres at 1.3% copper equivalent. And then on the other side, another section, much thicker zone of mineralisation, hole 40 with 52 metres of about 1% copper equivalent, and one of the recent holes we just reported, hole 64, which had a wide zone of supergene and chalcocite mineralisation. We've also hit some very high-grade massive chalcopyrite in the far northeast of the area. You can see a couple of pictures here, hole 15, hole 19, up to 14% copper, really nice mineralisation. And we've also, in some of the recent drilling, been intersecting some high-grade supergene enrichment style chalcocite. You can see an example there, hole 58, with some massive chalcocite. So the geophysics is working very well. In this picture, the downhole EM conductor anomalies in the IP coincides very well with the copper mineralisation, and this just shows that the mineralisation is likely to extend further at depth and is still open both east and west. So this, again, telling us this is going to grow further yet. We've also begun drilling a couple of satellite targets, IP anomalies, strong targets that look just like the signature over La Romana. We've completed the first two of those holes, hole 101 and 97, and we've got two other holes planned on a couple of other IP targets. We're encouraged with what we've seen, again, we look forward to the assay results. So just stepping back now, so all of our exploration at the moment has been focused in the green area labelled Escacena and primarily at the La Romana target. With the yellow area called Al-Andalus, that's the area we're expecting to be granted any day now. That's going to more than double the available exploration area, but more importantly, it's going to give us access to a number of very high quality targets where I think we're going to make another discovery. We've got at least 10 other targets in that area. So just looking at the gravity image here, you can see the signature, the gravity anomalies over Asnocoya and Los Frailes, both very big, massive sulfide deposits. Gravity anomalies in this part of the world are good news. Both the Los Frailes and the Las Cruces deposit were discovered by directly drilling gravity anomalies, and our own discovery at La Romana was found by drilling a gravity anomaly. So we have a bunch of other big gravity targets in this area that are untested, and why I think we're going to make additional discoveries. So I'll just zoom in on a couple of those targets. So you can see on the left-hand side the Bravo gravity anomaly. It's about 2 kilometres along strike from La Romana. There's an old IP trend that Exxon IP data extending in that direction. Very big target, completely untested, really high priority in this part of the world. On the other side, you can see the Pilar Viejo and La Jarosa targets, very near to the Asnocoya open pit. Again, a very big gravity anomaly with some copper mineralisation on the margin of it. An old drill hole that Exxon did back in 1985, 9.5 metres at 1.4% copper, never been followed up. There was also some chalcopyrite at the base of cover in an old rotary drill hole as well. So again, this looks very good, and we've got several other big targets just like these elsewhere in the property, so watch this space. All right, so a bit on the capital structure. We've about 190 million shares out. About 10% of that is held by the directors. We're cashed up. We've got about 15 million in the bank at the moment. We're expecting close to another 2 million in December with the exercise of warrants. That's at 24 cents each. So we're primed and ready to go to hit the ground hard going into the new year and test some of those big targets in the Al-Andalus area. And also to continue to grow the La Romana deposit. So check us out. Thanks, Eric.
Thank you, Tim. You've probably never heard of the next company. It's this little deal called Big Bear, Great Bear, Green Bear, something like that. They've been doing a little bit of drilling in Red Lake. People seem to like the stuff that they're drilling. So without further ado, I mean, obviously, if you haven't heard of Great Bear, I don't know where you've been the last 3 or 4 years. We're going to try to get as much update as we can out of Chris. He's been a very quiet fellow lately. But tell us what you can, Chris Taylor, the CEO of Great Bear. And don't mind the clicking. That's Bristow asked me to wear a wire. So
Thanks, Eric. Very useful. Well, thanks everybody for showing up to listen to all of us. It's actually really nice to be here in person again. I find that over the last several months when we picked up the in-person travel and presentations, it sort of gets you all fired up. I mean, it's exhausting talking into a screen when you just do like an entire year of Zoom meetings, so this is 100% better. Okay, so I'm going to talk. I guess there's there's the time. I'm just going to stop when that gets to the end of the time, and we can take any other questions in the Q&A. So I'm going to make some forward-looking statements, obviously, part of my job. Just take everything with a grain of salt, and if I say anything untoward, you can grill me later. So I thought it'd be kind of fun. I've presented at MIF a number of times, so I thought, why don't we put up some of the share charts that we incorporated into the MIF presentations over the years. And there was always a theme when we presented at MIF, and the theme was always I missed it. You know, you're doing a great job. Sorry, I missed Great Bear. So the top left image on that graphic is from May 2018. And I actually distinctly remember walking around the floor of MIF and having people patting me on the back in celebration. And if you look at that graphic carefully, it goes from about 15 cents to a high of about 50 to 60 cents. So at that point in time, people were already telling me they had missed Great Bear because we were doing a great job, but the discovery had been made, and they would catch up with me on my next deal. So take that down the road a little bit to September, same year, September 2018, and you can see the graphic there when we actually made the Hinge Zone discovery, went up to the next level. We got Rob McEwen invested in the whole thing. So there you're looking at the price growth from about 15 cents up to a couple of dollars. And people had definitely missed Great Bear. At that point, it was more high fives and pats on the back and the whole bit, right? So, well, it just kind of kept going. So we're looking at January of 2020, so about almost 2 years ago now. And this is after we'd made the LP fault discovery. And again, walking around MIF, making the presentation, talking about the fact we were finding gold along kilometers of strike length. And of course, everybody had missed it. So just taking it to today, I threw that graph together a few days ago when we crested over 20 bucks, and we cracked through that $1 billion market cap, which had been a bit of a ceiling on us for a number of times. And I plotted the stars of those previous MIF presentations on that graphic, and you can see the star of where we're sitting right now. So my theme being, you know, Great Bear's been a great success story, and it's something that it's been phenomenal. Like, it's a privilege to work on a project like this, and we know with what we're looking at that we'll never see this in our lifetimes again. We had some really good ideas, but we also had a lot of luck with this project, and anybody that thinks luck isn't a factor in mineral exploration is severely deluded. So we've been lucky, we've been smart, it's all come together really well, but why have we not yet missed it? And we'll talk about that a little bit in a couple of slides. So one of the impacts that we had on the local area here in Red Lake was we triggered the largest staking rush in Red Lake history. And that's saying something because Red Lake has been mined now for 80 years. So if you look at the graphic on the left, that's the claim maps around when Great Bear got involved in the area. And the map on the right is the current claim ownership. And basically, our discovery south of town opened up that whole world of exploration, which is also located south of town. Of course, you've seen some big players come into that region recently, mainly because the discussion now is what does this new belt of rocks that has the Dixie discovery in it, what does that look like along strike? So that's what people are quite interested in at the moment. And of course, we've had Evolution Mining come in and take over the Red Lake Mine Complex. Pure Gold is now in production in Red Lake. There's sort of been a renaissance or a rejuvenation in Red Lake, which we're happy that we've been part of. And why? Like, why does Great Bear matter? I get asked this question all the time. And really, it's the nature of the discovery that we've made here with the LP fault zone. We had the Dixie Limb Zone, we had the Hinge Zone. These are high-grade gold discoveries, zones on the project, which are basically like everything else in Red Lake. They're high-grade golden veins. They're a bit of a pain to drill off. You have to drill them on like 10-meter centers, sometimes less than that to build up the continuity. The LP fault discovery is completely different. So the LP fault is like the Hemlo discovery, and there's people in this room that will definitely remember the Hemlo discovery from the 1980s. And the Hemlo is sitting there on the left side of the image in front of you. And the reason that matters is because it's the closest deposit to what we've got with the LP fault. The geology is very similar. The predictability of the high-grade gold is very similar. What's really interesting is that Hemlo produced over 20 million ounces of gold in that nearly 40-year period since the discovery. We're looking at the same kind of rocks, the same kind of predictability on the high-grade gold system. And what we found, though, at Dixie is a multi-kilometer gold system. And it's amazing when we look at it. Hemlo is about 2.6 kilometers long, strike length, so you get 22 million ounces crammed into that 2.6 kilometers. We're drilling a grade right now which is over 4 kilometers long. So we're actually looking at a bigger gold system. I'm not saying it has more ounces than Hemlo. What I'm saying is it's a really big gold discovery. And we've drilled it now. When you look at those images, they're exactly the same scale, side by side on the picture in front of you. A kilometer is a kilometer, image to image. So Hemlo is drilled down or mined down to nearly 2 kilometers in places. And if you look at what we've got here, we've only drilled down now so far to about 800 meters. So if you think about a human body, and I'll step away from this, I'm not a very tall man, but I'm going to do my best here. So if you think about a human body, Great Bear is kind of drilled the head of the system. And what we're looking at in the Red Lake area, there's mining down to about 2.5 kilometers. So 800 meters on a human being would be about the head, maybe some of the shoulders. That's what we've got drilled now. We're going to be talking about drilling maybe part of the head. That'll be what's included in our Maven here. The rest of the body extends down below. So when you're thinking about what the potential is, it's okay. I'm done wandering now. When you think about what the potential is, you know, what's going to cause me an enormous headache when the resource comes out is describing the fact that the resource is only the top of the human and the rest of the body lies below. The point being, though, even just the top, the head part of it here, what goes right to the surface will be a major gold system in its own right. And that's what we're going to have a lot of fun talking about that. It's going to have great grade. It's going to have exceptional continuity. And, you know, my projection, forward-looking statement, is that'll be a very profitable enterprise for people when it gets into production. And this is why we're adding all these experts to the company. So again, Great Bear is not exciting based on what it's just found to date, but what it looks like it's sitting on top of. So how do we do all this? Well, science first. There's Bob Singh, the guy that found this project, VP Exploration. Man of mystery, never shows up at conferences in person. We had a board meeting the other day. People actually think he might be a hologram. They've only seen him on screens sometimes, but he showed up in the flesh, and we verified that he is a real man. So there he is standing beside me. Graciously, he's a few inches taller than me, standing with his foot in a divot, so I look like I have the towering presence of leadership. And anyway, that's us sitting on the project pretending to point out a target for the camera. So we did good science. Good science is what made the discoveries. We never cut any corners. When we drill a hole, we assay the core from the top to the bottom. So even if you think you know what the gold mineralization looks like, you can be surprised. The reason I say that is that people had drilled our major discovery before we even got involved with the project. There was unassayed high-grade gold sitting in the core boxes, never assayed because the LP fault sits in those Hemlo-style rocks, which apparently are garbage, and they're not sitting in the Red Lake-style rocks, which are beside them where our hinge zone and limb are. So it's because we found this system in new types of rocks. They had already been drilled in the past and just never assayed. You could see the gold in the core, and it had never been assayed. Anyway, don't cut corners on the science is the lesson here, and you can make the discovery. And of course, we've brought in a very qualified team over time to help bring the company through all those significant development steps. And, you know, ESG is one of the words of the moment. Take it very seriously. We have Jenny Piette, our Director of Sustainability, sitting in the audience there. I'm going to try to make her turn red. Hi, Jenny. So we take all that seriously. All this that we've done, we've managed to keep the share structure very tight. There's still only 58 million shares issued and outstanding on the company. The market cap now is over $1 billion, and we've got about $75 million in cash. How much cash is that? Well, it's enough to do the drilling all the way through next year without the requirement to finance again. So just sort of sit back and enjoy the show. Where is it located? Well, I'm running out of time here. It's located in the Red Lake District. All the discoveries are within a kilometer of the highway. That's the highway that connects us to the rest of the west of the country. Used to care about this a lot, used to talk about this a lot. We don't really care about this now, other than the fact we have great labor, great access, great infrastructure. It doesn't matter from our point of view that there are other producing mines in the district. What we found here is just in a sort of a category of its own, and it will be developed in the future as a standalone operation. There's the zones labeled out in 3D. I won't gloss over this too much, just to say that it's multi-kilometers long, the LP fault, this big structural flexure in the crust, and we have these adjacent zones, the limb zone, hinge zone, etc., which are developed in the Red Lake-style rocks just beside that. And I'm going to wrap it up here in a second, just because I can take all the questions in the interview. But what we've got is, there's what it looked like in May of 2019. And if everybody asks me, I always get, why haven't you put out your resource yet? That's May of 2019. That's only 2 years ago. There was one hole in the LP fault. Right now, there's over 400. So what we saw when we went from the initial discovery to this was gold in every single drill hole across hundreds of drill holes across kilometers. And this is what makes it important. The middle of that image, the pink dots are more than 20 grams per ton. There's a high-grade spine surrounded by this low-grade halo. It's a little bit like a sandwich, where the meat, or if you're me, peanut butter, is in the middle of the sandwich. That's the high grade, and around that you get the lower grade material, that bulk tonnage stuff. That's the bread around it. You can see that geometry right there. That's what it looks like in long section. You can see the deepest holes are about 800 meters. Each one of those rectangles is a kilometer long, right? So we saw that continuity of mineralization everywhere we tested it along kilometers. And what we're defining, and we began putting out to the market, is these high-grade panels. So that middle of the sandwich, we see 23 of these high-grade zones that we're drilling and defining along over 4 kilometers of strike length. Those are what's important for the future of this project, because those kind of grades going to surface, those kind of grades are going to really be important economically. And with that, I'm going to wrap it up. I have a bunch of more slides, but we could talk about it later. So just everybody, thanks for listening. And happy to take any questions. We'll be out on the floor.
Good job, Chris. Sorry for the Bristow joke. Last but not least, Tom Ulrich from Aston Bay. Tom has been going into an area nobody's really been in for a very long time, although it's certainly a well-known area. Virginia, it's one of those places where it's all private land. He's negotiated land deals. When he and I talked about, I mean, that's slow during COVID, as you can imagine, because it's a very face-to-face thing. You can't do it through a computer screen. When we talked about MIF a couple of months ago, he was promising me news flow. As it turned out, he came in just under the wire with a news release this morning, and he's promising much more to come, and that's what you're going to tell us about, is everything that's coming in the next 3 or 4 months. Take it away, Tom.
Thanks, Eric. Great to be back at MIF, and I'm going to tell you just a bit of an overview about Aston Bay. We've got some great discovery stories on the go here, and make the case that just like Great Bear, you haven't missed out on this one. So it's definitely something to follow. I am going to be making at least as many forward-looking statements as the rest of these guys have this morning. Quickly overview of the company. Very small company. It's just me and Sophia and a half-time CFO. The real meat of our company in terms of the geologic thrust here is with this group on the right here, starting off with Don Taylor, obviously, the founder of Arizona Mining, a proven mine finder. We've picked up essentially Don Taylor's other company. This was his privately held company, looking for base and precious metals in Virginia. And luckily enough, in picking up this project, Don and his team have come along to advise and direct the exploration. Couldn't have a better group and a more experienced group. And these guys have been working in this area since the 90s. Having their experience and their relationships is absolutely critical to advancing these projects. And it's just, it's been bearing fruit. We think we've made, Don and his team with us have made two discoveries here in Virginia, and we think more to come. People don't think too much about Virginia as a sort of exploration destination, but it is a great jurisdiction. It's a fee simple jurisdiction, no permitting required for drilling on private land. Most of the land we're looking at is really owned by timber companies, so it is a resource-friendly area, resource-friendly partners. They're great partners because they also own large tracts of land, allows you to really get in there and do the work that you need to do and make those discoveries. And of course, no seasonality. You can drill year-round in Virginia. So great jurisdiction. The opportunity here really is that it hasn't been explored really since the 1850 California gold rush time. Virginia was the preeminent gold mining district in the United States prior to the California gold rush, Virginia and the Carolinas. So really, you know, when the gold rush came along, you know, the expertise up and left, the capital up and left, you know, to go for the easier pickings, you know, in California and the Klondike and Yukon. And so really what we have here is an area that, you know, is all, you know, we know there's metals in the ground here, but all of the whole exploration, it's all pre-modern exploration methods and modern mining methods. You know, and that includes both, really on the mining methods, really important things there are the, you know, the pumping and extractive, the extraction technology that we can use today. So as a result, you have a lot of shallow workings. You know, we're talking about 100 feet, 125 feet, you know, and really unexploited at depth. And it's not because the, you know, the mines petered out. They just didn't have the capital, you know, and they didn't have the technology to really develop these things. So that's a great opportunity. And of course, well, great jurisdiction, great opportunity. Anybody can come down and work on this. But really the advantage we have, again, it's with picking up Don Taylor's private company. Expertise, experience, the relationships, all of that is absolutely critical. And of course, we have a pretty hot database that really allows us to get in there and, you know, work on, pick up the properties, you know, that are most, have the most potential. I'm just going to give you a quick overview of what we're focusing on in Virginia. Really, it's two separate things right now. SEDEX, copper, zinc, VMS potentially as well, and vein gold. That's what we're looking at. And we're looking at three separate properties or areas here, and actually all three of these are really discovery plays, you know. On the base metal side, you know, this polymetallic mineralized belt here, really underexplored, you know, really nobody's done hardly any work in this area. We're going to go into it in a little more detail in a minute here. Just a press release out this morning, you know, we think we've made a pretty significant discovery, a SEDEX, zinc, copper mineralization. Really nothing else seen like this in this area before. We love SEDEX. They do have that size potential and consistency, so we're very happy to be drilling that right now. And we've just expanded our property position and our extend our drill program to another 1,000 meters, and we have enough targets to drill certainly into the new year here. The other potential property we have that we're going to work on next is our brownfields gold potential. Again, this is a past-producing gold mine. Pretty simple exploration rationale here. They only mine shallowly, drill underneath it, see where it goes. And of course, this is Buckingham Gold is our new discovery just in the last couple of years. This is a high-grade gold vein. It's a mesothermal-style gold vein. We love those, high-grade gold. You know, you get those ore shoots, you know, can continue significantly at depth and have significant ore shoots along strike. We are planning to drill this in 2022. Drill rigs are quite rare to find these days, and so we have to, at the moment we're drilling one at a time. The one we're drilling right now is our mountain-based metal project. Just a bit about that belt. You can see there, it's about 100 kilometers long. You know, we have the proprietary data here. You can see just the very pixelated mag, airborne mag there. But we have the regional stream sediment, the rock chip sampling. Again, this allows us to find those drill-ready targets. And we've already proven, you know, this works. We've made a new SEDEX discovery with our mountain-based metal project. What brought us here was a large 2.2 kilometer EM conductor. We essentially started drilling on that, and just to show a bit of the mineralization here, we've completed over 1,600 meters here in 5 drill holes, copper and zinc in all of the holes, stacked zones disseminated to semi-massive sphalerite and chalcopyrite here. You know, some of these zones are 20 meters thick with, you know, disseminated mineralization and thinner zones of higher concentrated sphalerite and chalcopyrite. We seem to have a potential feeder zone with some quartz veins and zones of silicification deep underneath these stacked zones. So we think we found the right part of the mineralized system. That's the trick here. You know, you can't just follow geophysics here. You know, the EM is going to lead you towards pyrrhotite more often than not, and that's not what you want. So we're very excited to have this SEDEX style of mineralization. You can see a bit of the chalcopyrite and sphalerite here in a small zone. This is just to be able to see it at this scale. That's how we have to show it here. But we love SEDEX. Again, important source of base metals. They have the size and grade potential, camp potential. We know some of the historic ones. They are very famous mines here. So we've expanded that program, and we are very happy to be continuing drilling at Mountain. Just quickly on the gold projects, the Brownfields project, that's what I'd like to drill next. Again, I was hoping to drill that before the end of the year. I think we might not have a drill rig freed up in time, so we'll probably hit that in the new year, Q1. Again, it is a 800 meters reported strike length. It is at both ends. It's terminated by dikes. We think it could continue as well. Again, there's no outcrop at the surface here, so very difficult for those pre-1850 miners to really find extensions here. But again, shallowly mined, 30 meters, something like that. Again, a very simple thing for those of you who've been following E79 Resources down in Australia in the Victoria Goldfields, the Happy Valley prospect. They exact same exploration rationale. Drill underneath those past producers that haven't seen, the capital and the technology to do that. Make a big discovery. They did a great discovery this past summer. Our Buckingham Gold Project. This is the new discovery. Again, high-grade gold at the surface. Up to 700 grams in the very, very sparse outcrops at the surface. Ounce material, up to 2 ounce material in essentially a vertical, nice clean quartz vein. It's open along strike. It's open at depth. We've only drilled quite shallowly on this one. We're picking up an additional parcel along strike as well, and we would like to continue that drilling there. Just to give you an idea of what we're seeing here. At this scale, I encourage you to maybe come check it out on the webpage, but you can see just what we're hitting here in the sort of center of this long section. Some of the grab samples, the orange triangles at the surface, those are the only outcrops, but again, significant high-grade gold at the surface. And down through the middle here, about 100-meter wide zone here, a bit of an ore shoot, again, high-grade material, ounce material. Seems to pinch off, the grade anyway, seems to pinch off as you go to the southeast or to the right of this section. But again, seems to pick up again off to the southeast, and we're very excited to drill again along strike, hopefully this new parcel soon as well, and at depth. So really, again, with us, really 3 discovery stories or potential discovery plays here. Our Mountain base metal project, again, just early days on that one, but it's a discovery. There's no other copper and zinc mineralization, SEDEX style, ever described in this area. Great potential on that one. The Brownfields gold, the Buckingham vein gold, all great discovery plays. And of course, for those of you who've been following the company for a while, our Storm copper and Seal zinc plays in Nunavut. It's very expensive to operate up there, and so we decided that we would option that to America West Metals. That company is just going public right now. They should be public by early December. We did a summer ground EM program up there with some interesting results. Those will be coming out before the end of the year here. And again, some great news flow there, great discovery potential there as well. So as I say, stay tuned. You haven't missed out on this one. We're just like Great Bear. Yeah, thanks for listening.
Okay, now all of you that have questions, and I'm sure a bunch of you do for all of these guys, we just move to the room to your left, and the Q&A will be in there. And I'm pretty sure, I think they've got food set up in there too. We usually do. You're not gonna miss anything by doing the Q&A. So why don't we head over there now, and we'll see if anyone has any questions.
Hope you're not too sleepy for my presentation, but we'll get started here. We've got 4 companies that will be following my talk. Two of them will be presented remotely by Quentin Henning, and the other 2 gentlemen will be doing their presentations as soon as I finish with mine. We're going to run the clock up here, so I know when I have to button up. I don't see the... so I can keep track of the time. Okay, good. All right, so I've titled my talk, Why Inflation is Not Transitory and the Great Crossover is Underway. By the Great Crossover, I'm talking about the move from fiat money, from money that is required by law to use, to money in which the market requires under circumstances of, that I think we're heading into. That people will once again require honest money and not money that can be created infinitely by central bankers. A book that I think is well worth reading is called The Fourth Turning. It's written right before the turn of the century. Just very quickly, the thesis is that every 20 years you have a turning. People start to think differently every generation. And every 4th generation, when you have 4 of those spanning 80 to 100 years, you have a major turning point in history. And the way I look at it is this is America's fourth turning, so I think it is a huge event that is starting to take place in America. And it will have ramifications for economics, for how we live our lives, but for markets as well. The 4th turnings, the first one was 1776, when the American Revolution, and there were certain views and attitudes that were different from the King of England, and that's why we separated. And then there were these other cycles. 1860, the Civil War was the second turning in American history. The third was the 1930s through the Great Depression, and the 4th arguably started with the financial crisis and the election of President Obama. So it's very important because I think the very philosophical view of America when it was created was one for liberty, for freedom, for the individual to be free of government. The idea, the philosophy was that we have our rights that are granted by God, not by government. And that makes all the difference in the world. If you believe that your supreme being is your president or your, whatever your primary government is, if you think that you owe your allegiance to them, then you will behave much more differently. And I would say that what America is moving is from free market capitalism to corporatism, or an uglier word is fascism. But the definition is there. The idea is that when corporations and governments are in bed together against the people, essentially, to get rich and to increase the power of the politicians. I think this is very much what's going on in America right now, that the large corporate interests are really in charge and are calling the shots more and more. I mean, things like pandemic lockdowns, forced vaccinations, censorship of political ideas in America now are being censored to a very great extent. Censorship of scientific ideas that are from qualified scientists are not allowed to speak, or shut out by YouTube and so forth. So these are things that I think are very, very different. The ideas of the Federal Reserve, of course, the Federal Reserve is not new, but it has essentially has really kicked into overdrive, as we will see when we go through this talk. The Federal Reserve is now in a very difficult position. They have to print more and more money faster and faster to try to keep the system from imploding, from going over the edge. So I'd like to say why I think inflation is not transitory. This slide is a little out of date, so I just posted the last CPI at 6.2%. It shocked the markets, and a good discussion by Eric this morning. The impact it had on the gold markets, I think, was very, very good. But so here's some of the reasons that I think inflation is not transitory. First of all, we have this excessive level of debt. We can't allow interest rates to rise, so they have to keep pumping more and more money into the system, that's inflationary, to keep the rates from rising. And if they allow rates to rise just a little bit, just a couple percentages or so, the system will go over the cliff. And the government will have trouble financing its debt as well. So there's going to be, the Fed is going to be forced to decide between a deflationary collapse or an inflationary prolongation of the current system, of the current economy. So federal deficit as a percent of GDP. Well, we know with COVID what happened, but they're still very, very large. And we have a liberal administration, an administration that is more socialist, that wants to spend endless amounts of money and sort of redistribute income through government payouts. And I think that one thing that we will be watching pretty closely will be the elections in the states, because if the Democrats continue with both houses of the legislature, then I think it will be, there will be less restriction on the creation of money, and the inflationary fires, I think, would burn brighter. But I think that, the recent elections are suggesting that there may be somewhat of a backlash against the far left movement from AOC and some of the extreme members of the Democratic Party. Deglobalization, I think, is a big factor now as well. And talking to Chen Lin the other evening, over dinner last evening, in fact, he was talking about how the Chinese have cut back on their iron production, their steel production, and that has really caused them to make huge amounts of profits. And so with the trade wars started by Mr. Trump, continuing with the current president, we expanded the global economy when we expanded globalization, but now it's running in reverse. So this is creating, of course, a shortage of supply in many sectors. And of course, also there is the aspect of the supply chain issue. Rising energy prices we have, I think, in part in the U.S., in large part by the Democratic Party policies. The president cutting the pipeline from Canada down to the U.S. He's threatening to cut another pipeline from Canada, I think, through Michigan. So it's the Green New Deal that is causing, I think, part of the problem, in addition, of course, to money creation and lots of money that's being put into the system to keep things moving forward. I think this is the first time in my lifetime since the 1970s, when I was a young man, that I can remember labor having the leverage that it has now. I don't think that that's going to go away right away, especially if the Democrats continue to control the government. I think we're going to have more and more transfer payments, which means they have to be paid for by money printing, because there's not enough taxes to pay for all the spending. We're running these huge deficits. So we're seeing a lot of wage inflation, and strikes are back. Just an awful lot of strikes are taking place. You can see the numbers there. John Deere, Kellogg's Cereal, Kaiser Health, 60,000 behind the scenes movie and TV workers were striking for a short period. Anyway, there's a long list of, labor now has the power, and especially with checks going from the government to the workers, that has really also emboldened them and given them a great deal of power. So debts, well, with COVID, we see the big spike up in debt to GDP. And so compared to the old projections, it's just really skyrocketed. So the debt is really very, very worrisome, projected to get out to, if I can read, 121% of GDP in the out years, but it's already, well over 100%, about 110, close to it. The problem that we have now that we didn't have earlier in my lifetime was that foreigners have stopped financing America's consumption. And this is the new Treasury debt recently issued, and you'll see the major amount of it was purchased by the Fed. And you had some pension funds that have to buy as well. But for the most part, the other people, the banks, the households, other people are gone. Foreigners, that's the most important one. The net export countries were recycling their dollars back in to buy treasuries. That's no longer happening. That means the Fed has to print money. That's inflationary. So here's a chart just showing how foreigners are dumping dollars. It's pretty massive, and they're decreasing the dollars that they're holding, and they're not buying new treasury offerings to the great extent they were. If you think that foreigners don't have a lot more to sell, they do. This was the latest slide that Alistair McLeod from Gold Money presented in his newsletter. So total liabilities of something like 32.7 trillion, all sectors. So foreign money, if they lose confidence in the dollar, or they have needs at home for whatever reason, we could have a huge number of dollars dumped into the system, which could be very harmful to the dollar. Not even the United States government is buying its treasuries for Social Security people like me. So there's no reason to buy the dollar when you're so deeply underwater in terms compared to inflation. When you have such high negative rates, it's financial suicide to buy the dollar. The other thing is that the laws of economics cannot be repealed by politicians. They can try, they can suppress, they can pass laws, and they can manipulate markets as they do all the time. But this shows the 10-year yield, and it's starting to rise, and this was before the latest CPI numbers. So it is arguably the 10-year yield is starting to rise, and the Fed will no doubt try to do what they can to suppress the long end of the yield curve, but it's very difficult to do. And people will step outside of the system and do other things, or they'll just simply, well, the Fed will have to buy more treasuries if no one else is. I mean, the rates have to go up in order for economic reality to be restored. Now, I'm just going to play this quick clip. This is really a very interesting discussion between Danielle DiMartino Booth and Adam Taggart recently. And I think, could I ask you to play the clip, please? It's about a 3-minute clip.
This is a chart of the Atlanta Fed's GDP Now graph, where they track GDP in real time. And it shows a precipitous drop where they were projecting over 6% GDP as recently as the end of August. It's now plummeted to 1.2%. When you have a slowing economy like this, but you've got rising inflation, which wins? You know, do you think which do you think will win policy-wise? Do you think the Fed will have to taper and maybe raise, or if the economy slows enough, can they just not do that? It's just not politically palatable.
The stock answer to the question which you're asking is the Fed going to commit a policy error? And the answer is yes. No matter what they do, the answer is yes. You cannot tighten into an environment in which you have all of these zombie firms that rely on the high yield markets, the capital markets staying wide open for business just to keep the lights on because their cash flow doesn't cover their interest expense. So they have to constantly turn over their debt. So you cannot hike rates into such an environment. You cannot hike rates in an environment in which the United States debt load is pushing $30 trillion. And yet you cannot not hike rates when inflation is out of hand as it is. Companies are trying to deploy mitigating efforts which people don't really understand to get wage inflation under control. And I think the biggest risk right now to the economy that nobody is talking about is the specter of millions of jobs having been eliminated forever, permanently, automated. The idea of accelerated automation is not being discussed enough by the broader media inside of the macroeconomic community and circle, and people just seem to think that because their time has come, employers are going to roll over and play dead and just pay up and screw the shareholders. It's not really how things work. Is there a massive divide and disconnect between how corporate C-suite executives are compensated and how their employees are compensated? Absolutely. Should the minimum wage have a 7 handle? No, it should have a 10 handle. We get that. 15, not so much in Mississippi or Texas where I live. So there are major disconnects between employers and employees, and I get that. But we would see more dynamism in the labor market. We would see more job creation. We would see more of the, oh my God, there's 10 trillion job openings. The sky is absolutely falling. Wages are going to the moon. We would see more of those openings being filled if companies truly had the need, unless there was a separate factor going on in the background, which is very apparent when you look at what companies are spending on IT and on automating, and it's right there in the GDP figures, right in front of your very eyes. So people cannot appreciate that there may be millions of jobs that were lost in the pandemic era that are gone forever.
Okay, so that's Danielle DiMartino Booth, who was the assistant to Fisher, the Federal Reserve board member. She had been his main assistant for a number of years, so she comes well qualified as a as a mainstream person, and she's pointing out that the Fed cannot win. One way or another, either it goes over the cliff into a deflationary depression, or we continue to spiral into an inflationary environment. And the further we go into the inflationary environment, the harder it is, the more painful the correction will be. So I think this is why I think it's not going to change. Of course, theoretically, the Fed could slam on the brakes like Paul Volcker did in 1980, when I had a 17.5% mortgage on my house, the first house I owned. But that's not going to happen this time. It can't happen this time. It could happen in the 70s because America had a far lower debt to GDP. It was a robust exporting country to a great extent, a manufacturing country yet, but no more. We cannot do it. So this is why I think we're headed for some very difficult times. And most likely, if you think the Fed will actually slam on the brakes, then go with the deflationary scenario. Otherwise, longer term, I mean, timing is difficult, but I think we're headed for inflation as far as the eye can see until something breaks. Just a quick chart of the gold market. Now, in nominal terms, the gold market looks like it's, it's okay, and it looks poised for the next breakout, and I think it is. I think we're ready for it. By the way, Michael Oliver, who I have on my show almost every other week, his number was 1825, a weekly close at 1825 for gold. I would imagine, I haven't checked in the last hour or so, that the markets are closed now and that we probably have seen well north of 1825, which he believes was necessary for the next major breakout in gold. However, if we look at gold in terms of the amount of money that's been created, we are at a low. We are almost as low as we were when gold was at $35 an ounce, and almost as low as we were when gold was at $250 in the early 2000s. And what happens and why is gold so low? Well, really, I think it's price discovery that's distorted by massive bank selling, massive future selling in the markets, which this was just on the 3rd of November, was this smackdown in a matter of hours by the central banks that pumped huge amounts of money into the system. So what could set the gold price? What could cause the next? Well, I think the market is starting to recognize. I think Eric hit on several of the points this morning in his talk. But what you have to realize is that we've not had a fair market in the gold price for some time. We've had long-term gold prices go up. They do. But in the short run, they can discourage investors for exiting dollars and going into gold. And that's what they've been doing. So we're looking at, this is huge amounts of, LBMA bullion is like 100 tons. It's just 1,500 tons of paper compared to 100 tons of physical. So the paper markets just keep distorting. They're pumped into the short end of they go short the market and the futures markets, and they knock the price of gold down. So what you're seeing as the gold price isn't really the price for physical gold, and it's distorted, and it's screwing the miners and the prices that they get for their product. But that is about to come to an end because Basel III no longer allows for the banks to do this. They can't put these derivative assets on their balance sheet anymore without raising capital or without having the other side, the same instrument on the other side of the balance sheet. And this starts on January 3rd. It could be that the banks are already starting to, because we've seen repeatedly massive smackdowns that didn't work very well. The gold price would come right back up in the next hours or days. So I think they were the bullion guys, the bullion banks were losing control before this, but I think it's in part because of what's happening on January 3rd with the Basel agreements, which do not allow banks to carry derivatives on the asset side of their balance sheet. Alistair McLeod has written and talked a great deal about this sometimes on my radio show, and so it's something I think is worth watching. It could allow gold to really rise very dramatically. Now, I think Eric pointed out this morning that the gold miners' free cash flow. The gold miners are doing extremely well. They avoided the mistakes in other cycles where they paid way too much at the top of the market for new deposits. And now gold miners are showing free cash flow. This is after inflation. And they're the only one in the S&P 500 other than financials, some of the financials, that have positive real free cash flows. That's the only sector. So the gold miners, they're being more conservative. They're not paying crazy amounts of money for new deposits. And they've got really strong balance sheets. And they're ready to, I think, start buying gold mining companies, and I think we'll see some M&A activity in the not-too-distant future. Maybe you're already starting to see it. This is just a slide to show you that the S&P earnings yield is, well, it's negative now. So these high-priced S&P stocks, maybe they're seeing nearing the end. This is the GDXJ, or the juniors, versus inflation expectations. This is a very recent slide. It would probably need to be updated a little bit with the move in the gold shares in the last few days. But nonetheless, what we're seeing is in terms of inflation expectations, which probably have also risen since this slide was created, there's lots of room for the gold miners to go up, to keep up with this. Was pretty well correlated in the past. The other message is that the gold miners are making lots of money, but they haven't made many new discoveries in recent years. And so I think some of the companies that are here, and one that we're going to be hearing from in just a moment, Amex Exploration, is a company along with Great Bear and a lot of others that are starting to develop world-class gold deposits. I think are going to make a lot of money for investors that are buying at these levels before the generalists start to buy the gold shares. So that's basically what I had to say. I think that my bias, I used to be a deflationist. My bias now is that we're heading for inflation that cannot be controlled. I think it's likely to spin out of control eventually. They'll try to do whatever they can, but there's not much you can do long-term to try to defy the laws of economics any more than the laws of nature. So I would say hang on to your gold shares, look for good gold mining stories, and with that, I'll say that's really all I have to say, except that listen carefully to what Kelly Malcolm has to say next. He's going to talk about Amex Exploration, incredibly high-grade deposit that they're outlining in western Quebec near the Ontario border in the Greenstone Belt. So take it away, Kelly.
Well, that was a very warm introduction. Thanks everyone for listening. I'm Kelly Malcolm with Amex Exploration, which, although we've done quite well in the market, we've found, in my opinion, quite a lot of high-grade gold, is still underknown and not a broadly understood project and company. So I hope today that can change a little bit in this audience. So I will make forward-looking statements throughout this presentation. Amex is very strong on a capital front. We have done exceptionally well in the market, pre-discovery, trading about 5 or 8 cents, hit a high at the end of last year of $4.20, currently trading about $3.13. Coincidentally, Jay picked us up right in that little dip that happened a few months ago, so good timing on his end. Great shareholders here. Market cap around $250 million Canadian. We've got about $17 or $18 million in the bank, spending about $2 million a month on one of Canada's biggest drilling programs. We've got 8 drills currently operating, 10 drills on site, and we've been doing this since discovery at the end of 2018. Company's led by Victor Cantore, who has previously been involved in the lithium space as well as financing junior companies. Jacques Trottier is the chairman of the board. He is a PhD geologist, founded a company called Celadin. That was acquired in 2014 for over $600 million. It's a really neat story. He picked that up as a small Peruvian artisanal mine and built it up to 3 million ounces of gold and hope to do it again here. Also myself, VP Exploration, previously with Detour Gold, St. Andrew Goldfields, and some junior companies. And we've also got Brian Coates on the board, who was the past president of Osisko Gold Royalties, and funny enough, was born and raised in the small town that we're operating in Quebec. Here we are adjacent to the town of Normetal, road accessible, easy to drive to Timmins, Kirkland Lake, Rouen, Val-d'Or, essentially right in the hub of the Abitibi Gold Mining District. This is a look at our property geology. We've made a number of gold discoveries. The one that's really driving our valuation increase over the past several years is the Eastern Gold Zone, aptly named on the east, comprised of high-grade zone and Denise. One is very high-grade, one is much lower grade, but much larger in terms of volume. We've got the Gratienne Gold Zone to the west, the Grey Cat Zone, Central Polymetallic Zone. We've also announced 2 new high-grade gold discoveries marked there by the stars in the middle of the map. And in addition to that, we also made a high-grade copper discovery a few months ago that we're working on expanding currently. So lots of lots of potential. We found, in my opinion, quite a lot of gold, and we're working to significantly expand upon that in the coming months. This is a really cool slide, just shows the progression really quickly from discovery of the Eastern Gold Zone, which is on the right of the map, that's looking down, and then looking from underground at the same images. So this is right after discovery in 2018. After definition drilling, drilled down to about 500 meters on the high-grade zone, started expanding the overall footprint of mineralization. By year-end 2020, we've drilled down to over 1.2 kilometers, which is more than 2 CN towers deep, hitting high-grade gold consistently from surface to those depths, as well as significantly expanded the overall gold footprint on the project. Here is the Eastern Gold Zone. So we've got our high-grade zone that kind of trends northeast, away from the main structure that runs very east-west. And then you've got that big, broad Denise zone. We put out numbers yesterday up to 8 grams over 44 meters from that zone. So even though it's a lower grade system, there is some very high-grade gold present. This is a look at a long section, basically from underground, looking at the high-grade zone vein. We found gold from just below surface down to over 1.25 kilometers. Exceptional results, and the neat thing about Amex, and something that differentiates us, is we are very consistent in delivering high-grade gold. You can see by the pink corridor that runs throughout that longitudinal section that this high-grade gold is very continuous, and that is something that sets us apart. Some of the numbers we put out in the past 6 or so weeks: 102 grams over 6 meters, 29 grams over 8.4 meters, 37 over 6.2. That's from the deeper portion on the left of the map. And then near the shallow portion, 84 grams over 5.6, 44 over 7, 76 over 3.5. And we've been literally, if you look on Stockwatch and go through the past 3 years here, we have been delivering these numbers again and again and again and again. Denise is adjacent to the high-grade zone, which is really interesting. It is significantly larger, lower-grade mineralization, but like I said, does have the potential for high-grade gold too. Some examples of some of the bigger numbers here: 115 meters of 1.4 grams, 189 of 1, 50 of 2.1, 100 of 1, and you can also, like I said, get some higher grade material. We put out 8 grams over 44 meters yesterday. We've also hit 40 grams over 5.5 meters, so lots of different ways you can look at this, but the way that we're currently modeling it is a big bulk tonnage system that should be easily accessible by an open pit, which coincidentally will allow you access to the upper portion of that very high-grade Bonanza high-grade zone. Metallurgy here is basically perfect on the high-grade zone, better than 99% gold recovery. The reason being is it's very free gold. Most comes out by gravity, so better than 75% of all of our gold was recovered by simple gravity, which is the same way they've been recovering gold in the Yukon for hundreds of years now. We've got another zone called Gratienne that we don't do that much work on, but it's also sizable, kilometric in scope, stacked lenses of high-grade gold mineralization. Examples from this zone include 1.5 meters of 67, 4.2 of 17, 5 of 27. We've got another zone called the Grey Cat Gold Zone that sits in between. There's a little legend in the upper right portion of the map here. This one's disseminated, near surface, low-grade gold. Examples: 34 meters of 1.9, 27 meters of 3.4, 28 meters of 1.2, and again, very consistent. Here's a longitudinal section looking from surface down to over 350 meters. This looks like a really simple, easy starter pit, and we're enthused about the ounces that will come out of this as well. And then the fun stuff. So on our regional front, we're doing about 25,000 meters dedicated solely to regional exploration drilling, which is more than a lot of junior companies do in a year on everything that they've got. From that 25,000 meters, we made 2 new gold discoveries in the past year: 3.9 meters of 58 grams per ton in the first one. Second one on the bottom, 7.3 meters of 22 grams per ton gold. Again, very high-grade gold. The neat thing about these 2 discoveries in particular, it's really hard to see on this screen, unfortunately, but we've got the high-grade zone trending sort of in this orientation, northeast orientation. These 2 new discoveries trend on a parallel structure to the north. So we've started to unlock the secrets to the high-grade mineralization on the property. And looking at this map, it's too hard to show on this slide, but come to the booth and I'm happy to show you what that looks like. But there's a number of these repeating structures elsewhere on the project. And lastly, we made a copper discovery recently, which we're really excited about. We've always thought this property had VMS potential. In fact, it was originally explored for copper by Falcon Bridge when we acquired the project several years ago. And the neat thing about this discovery in particular is it's directly adjacent to a past producing mine. That mine went from surface to over 2.4 kilometers, mined over 50 years. It's 4 kilometers away from us. We essentially hit the exact same grade over the exact same widths, or very similar grade over very similar widths to that past producing mine. So we think there is something sizable, substantial there. We're doing some more work on it. Just for reference, the past producer was 10 million tons, 2.1% copper, 5% zinc, half a gram of gold, 45 grams of silver. Our hit was 8 meters of 2.4% zinc, or 2.4% copper, 0.7 zinc, 0.3 gold, and 22 grams of silver. So very similar mineralization. We have a drill sitting there working continuously on this zone, and it's kind of a sweetener that we're adding to the overall the story. We're still a gold-focused exploration company, but we think that the copper is quite exciting, especially considering the market for copper at the moment. And basically, in summary here, what we're doing is we're drilling a whole lot of holes. We're in the middle of a 300,000 meter drilling program, spending about $2 to $2.5 million monthly on exploration. We've raised over $55 million for this company. And our goal here is to put out a resource and advance it to the next level, be it a transaction or be it building, potentially building up the project ourselves. So thank you very much for listening, and I guess that is it. Thanks.
Thank you, Kelly. A very, very good story. Another good story coming up now is Goliath Resources. Quentin Henning is going to be, I think it was a pre-recorded, a pre-taped presentation. Quentin couldn't be here today, and he was tied up. So he will, however, in the Q&A session that follows, I understand, be available live for questions. So we hope that you all join us over in the Q&A next door here after this session is finished. So I guess you can take it away and go ahead and present Quentin Henning.
Hello, my name is Quentin Henning. I'm advisor and director of Crescat Capital, a strategic shareholder in Goliath Resources Limited. Goliath is a Canadian explorer, trades on the TSX-V under the symbol GOT, and on the OTCQB under the symbol GOTRF. I'm going to speak to you today about their exciting exploration in the Golden Triangle of British Columbia. Before I proceed, I must draw your attention to the forward-looking statement. This is posted as part of the presentation on the company's website. I would urge you to read it at your leisure. Here you can see the capital structure. The current share count is about 55.3 million shares out. With warrants and options comes to a fully dilute 87.2 million shares. Board and management hold about 12%. Crescat Capital just under 10%, and Eric Sprott holds 8.2%. The Gold Digger project is located near the southern terminus of the Golden Triangle, south of the town of Stewart. It's situated within a geologic feature known as the SK Rift, which encompasses a number of world-class ore bodies, including the SK Creek Mine, Kersulfuret, Bruce Jack, and more close to home, we've got Dolly Varden and the Homestake Ridge deposit. The map on the left shows an early image of the discovery of the Sherbet back in 2019, along with a lot of surface samples collected during that time. Many of the numbers you see here are in the tens of grams per ton gold equivalent. Very exciting discovery. It was followed up in 2020 with channel sampling along the Sherbet zone, which yielded many, many channels of, say, on the order of 10 meters of 10 plus gram gold equivalent. That was enough to inspire the company to go ahead and start drilling in 2021, and I'll talk more about that during the rest of this presentation. Here you can see the project, the Gold Digger project, extends from Alice Arm down here in the south, all the way up to the snowfields in the north. You can see Homestake Ridge and Dollyvarden immediately to the northeast. Here's a more recent image of the Sherbet Zone, which is this red feature that wraps around the mountain like a horseshoe. It comes up the north face, goes over the crest right through here, and then extends down the southeast face of the mountain through here. There's two near vertical structures, one called the Real Deal and one called Cloud 9, that are projected to intersect the Sherbet Zone at depth, and I'll talk more about that and what we found this season. You can see all of the drill pads that were positioned to test this season, shown in blue stars. The image on the left shows the drill array. We drilled 5,332 meters in 24 holes. Many of the holes were near surface where the Sherbet Zone outcrops. Some were drilled a few hundred meters down dip, and then there's one hole that was completed late in the season from the Real Deal drill pad, which intersected the Sherbet Zone over 1,000 meters down dip. This is an absolutely astounding result for an early stage discovery. So far we have assays for 3 holes, and this includes hole GD213, which assayed 4.46 gram per ton gold, as well as 122 grams silver, which is 6.37 gram per ton gold equivalent over 35.72 meters. It's an absolutely remarkable result, but we're also anxious now to see the assays for the remaining holes, all of which hit significant intervals of mineralization. This table lists the drill holes, where they're located, from which pads they were drilled. You can see the ones we have assays for, the first 3. We're awaiting assays for 21 drill holes. I'll draw your attention to the fact that all of these holes intersected mineralized intervals. You can see here their widths, and all of these are pending. Here's a cross section. This is looking northwest. It extends from the outcrop of the Sherbet up here towards the top of the mountain, all the way down to this drill hole number 24 that I mentioned earlier. This drill hole actually tested the Sherbet Zone at depth. It actually intersected mineralization along the Real Deal and then went into the Sherbet Zone, ending in granite down at the bottom. This hole gives us great comfort that we have mineralization extending continuously from surface for about 1,125 meters down dip, and it is open at depth. We think that the fluids that came up this structure also fed the Real Deal and the Cloud 9 structures, and I'll talk more about that at the end of the presentation. Here's yet another cross-section, similar orientation, but it's a little bit further down the hill. It shows the position of the cliff pad, which was the pad from which holes 1, 2, 3, and 4 were drilled. You can see here. We have assays for holes 1, 2, and 3, still waiting on assays for 4. And here's our hole 24, way, way down dip. Again, shows the continuity, the absolute magnitude of this size of this target is absolutely incredible. And the fact we were able to demonstrate this with an intersect way down dip here is just a remarkable outcome, again, for the first season of drilling. Now I'm going to talk about the mineralization. I'm going to show you a series of slides that show the mineralized intervals from some of these drill holes, so you get a sense that we're quite comfortable we're onto something big. You can see the rock on the left-hand side. That's actually a piece of rock collected during channel cut sampling. It's a polished slab of the mineralized material. The brassy material is pyrrhotite, mostly, a little bit of pyrite, and then the gray and kind of silvery minerals that you see in there, these streaks going through here, are sphalerite and galena, with which which the precious metals are associated. The white is quartz. This texture is very distinct, and we saw it clearly in many of our drill holes. This core over here is from hole 3. It assayed 38.3 grams per ton gold, 338 grams per ton silver. It looks almost identical to what you see on the left. Now let's look at what we hit elsewhere. Hole 3, the core from the mineralized interval is shown along the top row, and this will be the case in each of the subsequent slides. What's shown in the bottom is simply an individual piece of core from the mineralized intervals we hit in some of the other holes. Again, these are assays pending. You can see here's some of the mineralization from hole 4. Looks very similar. Again, pyrrhotite And then we got galena and sphalerite in the kind of dark grays and silvery colors here. And then our brecciated quartz. Here's an example from hole 6, again comparing to hole 3. You can see clots of pyrrhotite, sphalerite, and galena. In fact, the galena and sphalerite is quite abundant in this particular piece of core. Here's hole 18, massive pyrrhotite through here, but we have a lot of sphalerite and galena and silver sulfur salts over here. Again, appearance-wise, very similar to what you see in hole 3. Not to be too repetitive, but here we are in hole 21. We're going a bit further down dip, and once again, we see the same textures. We see pyrrhotite, galena, and sphalerite, intermixed quartz, brecciated often, very similar in appearance to hole 3. Last but not least, we have a picture of core from hole 24. This is quartz veining with pyrrhotite, and the dark colors through here are sphalerite, galena, some silver sulfur salts, very similar in appearance to hole 3. It is remarkable the continuity of the appearance of mineralization in all of the drill holes drilled to date. Here you can see a 3D model of the Sherbet zone. In the case on the left, we're looking northwest at this tongue-shaped feature. This is the Sherbet zone projected as it dips down about 45 degrees to the southwest. Here you can see our drill holes near surface. Some of these were very close to the edge or outcrop of the Sherbet zone, somewhere a few hundred meters down dip. And then you can see here our lone hole down, way down dip at Real Deal, which intersected the Sherbet zone some 1,100 meters down the true depth of this important vein. This is an absolutely remarkable result. Look at these two vertical features. These are the Real Deal and Cloud 9 veins. And these have mineralization very similar in appearance to what you see in the Sherbet zone. Why? Well, the fluids that probably fed the Sherbet zone coming from depth here probably leaked up these and also produced similar mineralization in those two structures. So we're quite anxious to test those as well. In the image on the right here, you can see we're looking down on the feature this time. So this is the Sherbet zone where it outcrops as it wraps up and around the mountain. Here's our drilling, and here's that one hole from that Real Deal pad way down dip. Notice how the Sherbet zone expands tremendously along strike as it goes to depth. Okay, so not only is it open down dip, it is widening up along strike as we go down further. This is a remarkable outcome. This thing has a huge footprint and is wide open for expansion in all directions. Just a little refresher. Again, here's the Sherbet zone. Here's our drill pads. I'm going to draw your attention to the Real Deal and Cloud 9 structures because I think it's important to mention how similar the mineralization that was discovered along these two is to that stuff at Sherbet. This last slide I'm going to show you has a couple of images. One is from Cloud 9. This is from the Real Deal. You can see mineralization here in outcrop that was discovered this past summer. Here's mineralization that was found in this creek bottom. And here are samples, hand samples. Again, these are quartz vein breccias with lots of pyrrhotite, lots of sphalerite and galena. Here we go, quartz vein with lots of strings of sphalerite and galena and pyrrhotite through them. Again, we think the fluids that fed the Sherbet zone are also feeding these two structures. And with that, I'll cut it to an end. Stay tuned for assays. We expect assays over the next few weeks. We hope by the end of this year, we should be able to present assays for the entire remaining 21 drill holes. Here's the contacts for Goliath. I would urge you to contact them to obtain further information. Thank you very much.
It would be a lot better to have Quentin here with us live. He will be available to take questions remotely in the Q&A session next, and he will also be covering White Rock Minerals. He'll be presenting after we hear from Arnes Kordic. He is an advisor to Puma Exploration. It's a company I started following when I noticed the very extensive channel samples, high-grade samples, high-grade gold samples in New Brunswick. The project there was very attractive, but I was really frustrated because they kept doing all these channel sampling, and I wanted to know what was in the third dimension. Well, they finally did poke some holes down, and the news is very good. Every bit as good as what we saw on surface. So without more, I'll let Arnis come up and tell you the story.
Thanks, Jay. Williams Good, Puma Explorations is a gold explorer in Atlantic Canada. The project I'll be speaking about today is the Williams Gold Project. It's an exciting exploration story in northern New Brunswick. And moving forward, looking forward statements. This project is triple fault. We call it triple fault, but more in specifically the Williamsbrook project is in between San Quentin and Bathurst, New Brunswick, about 25 kilometers from San Quentin, which is our home base, and Bathurst, New Brunswick Airport and Deep Port. The Williamsbrook project is the same geological trend as the hot area in Atlantic Canada and Newfoundland, similar to Galloway to the south and all over, I guess, to Ireland with Dalranian. We've got 30,000 hectares, and we've been focused on this project since 2019. We just released our first drill program was 2,000 meters, 2,200 meters. Our second hole we drilled on this project, and this was our inaugural drill program on this Williamsbrook project, was 50 meters of 5.5 grams. So we came out of the chute guns blazing, so it was quite impressive. If you'll notice the three trends that we have, O'Neill trend, and Williams 1 and Williams 2. These are pictures of September 19th, just to show how active we are in the field. September 19th was a property visit. The first trench went in July 2020, and by May 2021, we had been stripping at links, and August 2021, there's the initial drill program. And if you look at the overburden here, and we're very fortunate, the overburden in New Brunswick, northern New Brunswick, is about 2 meters. So we're able to strip, trench and strip, and be able to, if you look at the August 2021, you can see the veins at surface. So we basically drilled through the veins. Initial sampling that was done, if you look at the bottom there, there's 700 meters, there was 1.3 grams, and to the top, 700, there's another 1.3 grams, but in between there, you've got, this is surface samples, mind you, 241 grams, 79 grams, this is all at links, and Pepitos, 44 grams, so you've got, through a 700-meter area in length, you've got basically gold from 1.3 grams all the way up to 241 grams. This is what the mineralization looks like. O'Neill was 128 grams, Pepitos 58 grams, so we're talking some substantially high-grade ore here. The Chubby and Moose was, we trenched, and we've come up with some samples. In subsequent news releases, we've come up with, in a trench at Chubby, we've come up with some visible gold, which the further slide will show that. The mineralization here, the structure, if the cartoon on the left is a structure similar to the structure that they have on Marathon Gold, and if you look at the sample on the right, it's got the sample from Williamsbrook, and it runs 8 grams. You look at the structure is very similar to what they are getting at Marathon Gold. The report there was done by Terran, and the same individual, I believe, did the feasibility study for Marathon Gold. We launched a drill program here 6 months ago, 18 holes, and the holes were placed to determine if the samples that we recovered from the trenches were consistent at depth, went consistently at depth and for structure. If you notice that one of the holes we've got, the slides we've got is visible gold in the drill hole, and all the, you see drill through the quartz veins and into the rhyolite, the sediments, and the rhyolite. It seems that most of the mineralization, the high-grade mineralization, is at the contact from the sediments into the rhyolite. And as I said, we've done a substantial amount of stripping and trenching on this project. And if you look at the core there, the sample was 241 grams. That was a surface sample taken. But if you look at the slide on the right where the box is, 15 meters at depth, we came up with 80 grams at a third of a meter. So right underneath that 241 grams, in the same vein, we came up with a third of 80 grams, a third of a meter. Similar, the 74 grams that we had on surface, which was through the trench, we've came up with 45 meters at depth, 116 grams over half a meter. So we're finding that the veins that we come up with high grade are consistent with drill holes at depth. And that was our second drill hole. As you see, we're just basically drilling right through quartz veins that we can see at surface. These are the holes that were drilled, 18 holes. And if you look at the holes that were drilled here, we really didn't, and this is, as I want to emphasize, this is our Puma's first drill program on this project. Out of the 18 holes we drilled, we didn't miss anything as far as gold. And if you notice, the drill hole here, we hit high grade in every single hole. And as I said, this was our first inaugural drill program on this project. Now, the area that we've been looking at is an area that is 700 meters within that white box, and the current work that we're doing right now. And we haven't explored 3 kilometers south, and we've just surface sampled the area to the north. Now, this project came to our attention, and it was originally drilled in 1979, and it was originally 2.8 meters of 54 grams. And 1 kilometer away, there was another hole that was drilled, 23 meters of 1 gram. So it was a project that had a little work on it, but when we went into the field, we came up with the discovery at Lynx and at O'Neill that we decided to focus strictly on this O'Neill trend. And here's the picture of the original sampling and drill program that was done on Williamsbrook. And as you can see, 2.8 meters of 54 grams. And as I said, a kilometer away, there's a 23 meters of a gram. So we also have, excluding the Williamsbrook, we have properties to the east, the John Paul and the Portage. They've had a limited amount of surface sampling done on them and grab samples, and which we will do more in the summer. The exploration program that we're going to be continuing on Puma, in more than likely, the weather's been very good in New Brunswick, so we find that we get a lot of work stripping and trenching. So what we're planning on doing is finishing the stripping and trenching, getting all the samples back, and drilling starting in early January. So we feel that this is a very exciting exploration, and as I said, I want to highlight, it's an exploration project. And we've had some very, very exciting success, as I said, on our first drill program. Only 2,200 meters. We will be, we've increased that to 10,000 meters starting in January, and for news to follow, we should be coming up with some more surface samples. Drilling will start in January, and it's a very exciting project. Thank you very much.
Thank you, Arnes. So Quentin Henning will be presenting again by the pre-recorded, his pre-recorded presentation for White Rock Minerals. It's a Australian-based company. They don't trade in Canada, they trade in the U.S. And in Australia. They're involved, however, they're involved in Alaska in a very extensive VMS project, a lot of success, zinc, lead rich with a lot of silver. They also have a gold project that I think Quentin Henning, who is an advisor to the company, sees as possibly a very significant orogenic deposit as well. But we'll let Quentin talk about that now. So if you'd play Quentin's pre-recorded message, that would be great.
Hello, my name is Quentin Henning. I'm going to speak to you today about White Rock Minerals Limited, an Australian-listed explorer who is exploring in North America and Australia. Before I begin, I'd like to draw your attention to the disclaimer and cautionary statement. This is posted as part of the corporate presentation on the company's website. The company is listed on the ASX under the symbol WRM, and it also trades on the OTCQX under the symbol WRMCF. White Rock is exploring in Alaska, but also in Australia. This gives the company year-round exposure to exciting exploration stories. I'm going to talk to you about the assets one by one and give you a little flavor for the excitement behind this company. Here you can see that they are a diversified company, both geographically as well as in terms of the commodity endowment. You can see the resource at Red Mountain, for example, polymetallic, has a lot of zinc, silver, gold, lead. And then the resource at Mount Carrington has considerable precious metal, both gold, silver. Woods Point, very exciting gold asset, recently acquired through a transaction with Ozstar, an acquisition of that company a few months ago. Combined JORC resource amounts to 700,000 ounces gold, 76 million ounces of silver, as well as a huge endowment of zinc and lead. I'm going to talk to you today first about Woods Point Gold Project. This is in the Victorian goldfields. In fact, it is one of the largest goldfields within that very, very important district in Victoria. It's become very famous recently because of the Phosphorus mine, which is to the west. Woods Point is the main focus, though, for White Rock in this important gold field. You can see here their land position. They have a commanding position across the Woods Point area, and it includes historic mines as well as a large inventory of high priority drill targets that are basically sitting there ready for somebody to come along and test. You can see a little bit of data here about some of the historic production. Many of the mines in this region were very high grade. You can see, for example, Rose of Denmark was 12 grams, Lady Clare 13 grams. You can see down at the south there, the El Dorado mine, for example, was 30 grams. All of these mines have produced a few tens, perhaps a few 100,000 ounces. Biggest is the Morning Star at 850,000 ounces. Why is this an important district? Well, when I see high grade like this in a shallow orogenic setting, it's very exciting because this is way underdone in terms of exploration. This is kind of the picture that existed at Fosterville in the early days, and look at what that's become. This is truly a world-class opportunity for a junior company. Here you can see the Morning Star mine in profile. The geology is a diorite dike. It goes quite deep here. You can see the profile is over 1,000 meters. The green lines there are the veins that formed as that dike was fractured. Basically, the thing's been broken up like Jenga blocks And in between the blocks, you can see these green veins, which are high-grade quartz veins, that made this an exceptional mine. In fact, Western Mining got its start at this very important deposit. The company is focused in two areas. They're focused on drilling up in the upper portion of the system, looking for low-hanging fruit, unexploited veins that are remaining in the shallow parts of the mine. But they're also starting to test what's called the gap zone, an area where there has been very little exploration, but should host a number of high-grade structures, undiscovered structures. So the company is focusing their efforts there now. And the effort here is really two-pronged. At the Woods Point Gold Project, the company is exploring at a regional scale all of those very, very juicy, high-grade targets that I mentioned earlier, as well as in and around the Morningstar mine, where they plan to focus on underground exploration with the intent to recommence production once sufficient ore reserves are identified. I'm going to now take you to Red Mountain, give you a little bit of a picture of what's going on here. It's an exciting project. It's really a combination of two completely geologic models, but both are world-class opportunities. The land position, the Red Mountain and Last Chance projects sit south of Fairbanks. This company has put together an absolutely massive land package of 836 square kilometers. The resource that's been defined at Red Mountain is of VMS nature. It's basically a polymetallic volcanogenic massive sulfide deposit that has considerable zinc and lead, as well as precious metal, including silver and gold. This is a very exciting project in my view, because it reminds me a lot of other great mines in the state of Alaska, notably the Greens Creek VMS system, which has been mined for several decades now. Now, it's a very precious metal-rich VMS, much like this one at Red Mountain. The company has been diligently exploring here for really just a few years now, and they've identified a number of targets I'll be talking about in a very, very broad span that stretches from east to west, clear from the Last Chance area all the way over to the Red Mountain side of the property in the east. The Dry Creek and West Tundra Flats targets have been drilled, and that is where the existing resource is defined. Here you can see a long section of the Dry Creek system on the left and a cross-sectional view on the right. Very high grades of zinc, lead, and silver, and a bit of gold, as I mentioned. Recently, in fact, this summer, the company drilled a deep hole underneath one of the higher grade parts of this system. They hit a whopping 5.8 meters of 11.5% zinc, 3.4% lead, 69 grams silver, 0.8 gram gold, as well as a bit of copper. This shows that the system is alive and well and should grow steadily from here. Here you can see some geophysics that shows that we have a major trend of VMS potential, including the newly identified Kiwi trend, which is along the southern margin. The company has staked that ground, so that black line can now be extended into that important terrain. But basically, the company has a huge inventory of high-quality targets they've identified, and it includes things like this. You can see some of the samples collected this season. These were collected at surface from the Kiwi trend. It returned incredibly high grades of zinc, lead, silver, copper, and gold from the Kiwi trend. They did geophysics through this belt on a couple targets that have now shown very strong EM conductors, and this area has a number of drill targets now ready for exploration next season. Also present at Red Mountain in the Last Chance area is a very high quality Tintina gold belt type gold target. This project is called the Last Chance Gold Prospect. You can see here a very robust gold and arsenic anomaly associated with a broad area of intrusives that have come up into metasedimentary rocks. This is a shallow orogenic system. Without going into huge detail, it's basically a very high-level orogenic system which is ripe for high-grade gold discovery. You can see here that it is associated with intrusive rock, for example, over here. So it is what we call an intrusive related gold system. Okay, why is this important? Well, last year the company attempted to drill at Last Chance, and they drilled very high in the hills. But this year they recognized that the gold system's probably a bit deeper. Some of the sampling they undertook this season has returned very good gold values at some of the lower elevations in and around these hills. I believe the company is now well positioned to go back into Last Chance and make discovery, such as what you see here at the Pepper Gold Prospect. Now, lastly, I'm going to talk about Mount Carrington. This is the most advanced project in the company's portfolio. It is gold silver. It is in New South Wales. This is actually under earn-in joint venture with ASX-listed Thompson Resources, who have a commanding land position throughout this district. And Mount Carrington, they anticipate putting into production alongside some of the other projects they have in this area. This is a compelling case that generates a lot of cash. The free cash flow you can see here projected Australian $2,300 gold is about 126 million. It is absolutely a stellar project. And because Thompson Resources is taking this forward, White Rock does not have to put up much cash to advance this. They basically get free carried. To sum up White Rock, here you can see the capital structure. They have 142 million shares out. The current share price of about 30 cents Australian gives them about a 42 million Australian market cap, which is minuscule compared to the value they have within this portfolio of projects. You can see the top 20 shareholders. Crescat Capital is the group that I represent at 8.1%. It's an exciting story available in both the Australian market as well as on the OTC. I would encourage you to follow up with this company with these contacts shown on this slide. Appreciate your attention, and we look forward to hearing from you. Thank you.
All right, well, that finishes this session, and if you have questions for any of these gentlemen, as well as Quentin Henning, who I understand will be available to answer them, just join me and these gentlemen over here in the room next to us and ask away whatever questions or ideas or thoughts you have. Thank you.
I'll be talking about 4 companies, and I just want to go on the record that all 4 of these companies have been written up in the Morgan Report premium service, the paid service. So no favorites here. They're all good. And I don't write up every company, as anyone that follows my service knows. So not much more to say other than thank you, Matt. Thank you for everyone that's there. Thank you for all the companies that are sponsoring. And I think we're going to have a very, very good year in the resource sector going forward. I think it's already begun here in the last few days. I think gold was up, I think 6 days in a row. Silver and gold are both moving rather well. And I think we're going to see what we've all expected for a very long time over the next 2 or 3 years. So with that, I think we'll go ahead and start the presentation that I recorded previously. This is David Morgan of themorganreport.com, and I am doing a presentation for Metals and Justice Forum. I want to thank Matt Bennett and all involved with the MIF for inviting me back. Well, if I sound a little agitated and a little more amped up than usual, I am, and there is a reason for this. For everyone that attends the MIF and conferences that are similar, we have been basically, I'll speak for myself, I have been on a crusade for a very long time to bring to the fore the problems in the financial monetary system. And we're there. So it's not a entertainment vehicle anymore. It's not a what if or when, it's now. And I want to start off this first slide and point out the headline here, which we all can read together. Evergrande's plunge wipes out $250 million, which, by the way, off of Blackrock and Vanguard Holdings. Now, according to this article, both Blackrock and Vanguard are the largest shareholders in Evergrande and have posted hundreds of millions of dollars of paper losses following a more than 80% share price drop in the troubled Chinese property developer. So I'll admit I've been a bit wishy-washy when this news first came out on Evergrande, that I thought it wasn't that bad, or maybe it was. Right now it's unfolding before our eyes. And the point to note is not only the massive loss, but that both BlackRock and Vanguard are at the top tier. These 2 entities hold a huge amount of the financial sector in the United States stock market. They are paramount, both of them, as far as what they have. So I can't read the whole article because I'm not a member of the financial news here. The headline is enough. I think it's sufficient for you to understand that we are in a collapse. We are in an environment that's changing rapidly, and you can only do what you can do. Financially, as I've said for years, precious metals, you don't have to overdo it. You need some savings in real money. As far as the way to get leverage are in the companies, and right now is probably one of the best times I've seen in my decades in this business, which means that we are so undervalued on the resource sector, the precious metals miners and lithium, cobalt, you name it, copper, relative to the overvaluation, the S&P 500, that now would be a great time if you have holdings in the stock market itself to move into the sector or go overweight into the resource sector. So next up is an article that I wrote recently, and this is the real price of silver, $2,000 an ounce. And this, of course, is considered to be clickbait, and I will say, yeah, it probably is clickbait. But the point I want to make in this article, and I won't read the whole thing, but I'll just look at it occasionally to jog my memory, since I gave the speech at the Silver Symposium about a month ago. And I talked about the fact that, first of all, almost all commodities, with the exception of silver, are above their 1980 highs in price. But silver is the one laggard to the whole sector in the commodity space. And I talked about, what is the silver market? And as you all know, I talk about it being nothing more than a derivatives market, really the true silver market. we used to be an open outcry system where guys yelled at each other with hand signals and they settled, second by second, different lots of silver buying and selling back and forth. It's almost all electronic now. There's very little open outcry yelling back and forth. There's some, but most of it's done electronically. Regardless of how it's accomplished, what you're buying is you're buying a piece of paper, and a piece of paper says that you have the ability to buy silver in the future at a given price or sell silver in the future at a given price. That's what that market is. The physical market is a separate entity. The separate entity, the physical market, is really not going through the COMEX much at all. Only about 1% of the futures markets in all commodities, meaning oats, the grains, soybean oil, cocoa, cotton, or whatever, settled outside of the futures exchanges. They set the price, but when you're moving cotton, you go from a cotton dealer to, let's say, a 3M manufacturing company, and they ship the cotton there. I don't want to go too far off track. So here we go. I talked about how the technology has changed and how much silver is used in technology. It's gone from 35% of the market 2 decades ago to over 50% of the market now. And we've increased our amount of silver mined by about 300 million ounces, from 550 to about 850 in that time frame. So that's really something to be cognizant of. And based on my interview I did for our mastermind clients recently, about 3 months ago, Matt Watson, who does independent analysis of all the metals, did one on silver. We had him on, and he projects that by 2030, so 9 short years away, that the industrial component of silver will be 80% of the market. So I go on to say that we had a very, very strong market in silver in 2020 as far as the amount of investment demand. 350 million ounces or 320 million ounces were bought by institutions through the ETFs, and roughly 200 million ounces were bought in the retail market for a grand total of about 520 million ounces. That is better than half of the silver market. We've never had that kind of physical offtake in the silver market ever that I'm aware of. Even in the Hunt brothers, it didn't comprise of over 50% of the market, to my recollection. So that brought the silver price out of that 8-year low and up into the 20s, and we've been as high as 30 and off, and we're backing out today as I'm doing this update, or this presentation rather. We're at $25 silver. So I talk about the petrodollar and how that all came about. And what I really get to is talking about how silver is valued. And when silver is valued as money, it is always valued very close to the ratio or the natural ratio of gold and silver. For those that don't know, the natural ratio is how silver and gold occur in the Earth's crust. There's roughly 12 times more silver than there is gold in the Earth's crust in the 13th century. And as of late, it's down to about 9 to 1. So a lot of silver is mined at the surface, and it is easily obtained. And those days are long gone. The old expression, the low-lying fruit, has been taken. And now it's more and more difficult, just like in the gold industry or copper or any of the miners, it's more difficult to get product because the easy stuff is gone. Now, on the monetary front, for the last 4,500 years, we've never seen a gold-silver ratio above 20. It's only been in the last 120 years where you have seen this ratio go above 20. And the reason for that is silver was not considered money and officially demonetized in 1873. And in 1873, it was called the crime of 1873, silver was taken out as officially money and gold only. We went to this gold only situation. Now, when that happened, we started to get these big gold silver ratios up in like 100 to 1, 125 to 1, March of 2020. And now, of course, here we are at near the end of 2021, the ratio is around 75. When silver is money, and remember, we were actually on a silver standard in the world for a long time. And it worked very well, actually. at that time, the value of silver was valued properly, where there was enough silver in circulation for everybody to have an economy and use a monetary instrument known as silver that satisfied settlement for everybody involved. However, I did in the speech a quick look on why silver is not money. And I used the idea that in recent times, going back to my father, actually, or my grandfather, $1 of silver a day was a good size wage for the average person. And as you know, $1 in weight is actually about 3/4 of a troy ounce, but we could call it a troy ounce. So I looked at the statistics from 2019. I found that there's 157 million people, excuse me, 157 million people in the workforce in the United States. The average workday is 8.8 hours. And the average wage, which surprised me, is about $28 an hour. So that's roughly the price of an ounce of silver in US terms. I use the 8 hours instead of 8.8. I use 150 million people rather than 157. You do that quick arithmetic and you come out with 1.2 billion ounces would be gobbled up if everybody was paid in silver. So in other words, if you paid in silver, or silver was money, and you had to settle the wage rate for all workers in the United States for 1 day, there would not be enough silver. So what that implies, and I really didn't go into this in my speech at the Silver Symposium, I just kind of left it open for people to kind of, mull it over in their minds, but I will move on and you can rethink it. But my thought is, obviously it's not valued correctly to be money. If it was valued correctly to be money, then you would have to have a huge multiple above $25 an ounce for it to be equivalent to a day's wage. So I took that thought and I moved on from there. I said, well, look, if you go back to the early days, go back into the 1940s, 30s, 40s, 50s, then an ounce or 3/4 of an ounce, $1, was worth a wage, day's wage. So what's the day's wage? Well, you can play around with those numbers all you want, but roughly that's about $200 a day. Or if you take 28 times 8, you're going to come out a little higher, but I'm just going to use the number 200. So that would mean that 3/4 of an ounce would be $200 US in equivalent terms. And then what I did was I went back in time. Now, this has been done by others, not just myself, but I thought it was interesting because in a strong economy, everything works well. And Rome is a very good example of a strong economy until they started to debase the currency. Rome was basically run on a silver standard. Yes, there was gold, but it's basically a silver standard that ran the economic engine of the Roman Empire. And of course, they started to debase the silver coinage over time. And I think most of you know the end of the story. But at the time, a Roman soldier earned 1/10 of an ounce of silver. So I said, well, if today's weight was $200 for $1 for an ounce equivalent of silver, you would see it at 1/10 that amount or 10 times that amount. So 200 obviously times 10, we can all do that arithmetic in our head, is 2,000 an ounce. So that would be the equivalent of what it was worth back in the Roman Empire in today's venue. So you could think of the reciprocal. You could think of, well, if you were on a silver standard in the world, 1/10 of an ounce would represent a day's labor. So let's just move it up to an ounce, make it easy. So if we go to an ounce and you want to save a month's worth of labor, you would save 30 ounces. If you wanted to save 2 months of labor, 60 ounces, or 3 months, it would be 90 ounces. And that's why when people ask me, well, how much silver should I have? There is no right answer. It's dependent on your belief system. It's dependent on what you think is important. And it's your idea of, how much metal, real metal you want to feel secure and that type of thing. So I go to the high price. In other words, I think silver is still going to go much, much higher in paper equivalent. Will it go to 200? I don't know. Will it go to 2,000? I really doubt it. But I have said in the past, very early on, that I thought it would make it to $100 an ounce. So if I go ahead and round that up to 200, for this discussion, to have 3 months worth of savings would only be a 100-ounce bar. And a 100-ounce bar is what, $2,500 today, plus commissions, say $3,000. And it could be, in fact, I think it would be, but I don't know the future, equivalent to 3 months worth of savings. And that would probably be sufficient. So if you take that thought and you move on to how scarce silver is relative to the per capita base, meaning, people, the amount of people in a given sector, I played with that in one of the most popular videos I've ever done, Myths in the Silver Market. I explained that all of these coin dealers that I'm so familiar with, and many of you that delve into the physical side of these precious metals, know that most dealers and advocates will say everyone should own a little, meaning that everyone should own a little silver and gold. And I agree with that. I think everyone that's an investor or has savings, you don't even have to be an investor per se. You just have to, anyone that has a bank account and has savings, excuse me, should have savings in real money, some savings in real money. And if that were true, if you did it in the United States and everyone owned 2 ounces, that's 2 ounces times a population of about 350 million people, comes out about 700 million ounces, which is roughly equivalent to the total silver market. Total silver market's 850. So you go to 3 ounces. You could say 3 ounces times 300 million, come out with 900 million ounces, which is a little more than the annual silver supply. The point being that only 5% of the world's population are U.S. citizens. So what do the other 95% have? There used to be a chart in the CPM yearbook, silver yearbook, and it showed the amount of silver used on a per capita basis in North America. And it was very useful to me, or my thinking, because it showed that, and Jeff hasn't put that chart in a long time, but it showed at the time, and the best of my recollection, it was about 1/10 of an ounce per person, per capita, means per person, in North America per year. And that makes sense to me if you look at, your flat screen TV, your cell phone, your laptop, what's in your car, whatever you added during that year. You might have added a new DVD player or whatever. Anyway, the point being that 1/10 of an ounce per person. And I just explained that it'd be really hard for people to save 3 ounces per person. There's just so few people that are invested in the silver market. It's really, really pathetic. The gold situation is a little bit different, very underinvested. About 1% of all financial assets are in the gold market, but 0.02% of the financial assets are in the silver market. So it won't take much of a move into gold, spill over into silver to see the silver price go explosively higher. And unfortunately, but I've said it in the past and I'll say it now, I'm afraid it's going to be fear-driven. I'm afraid that when people are afraid, they're going to look for something of great stability. And nothing has more stability in the monetary system than physical metal, just the way it is. Before that happens, there will be a run by almost everyone that is worried into physical cash. They will look for Canadian dollar, the Aussie dollar, the US dollar, the euro, whatever. They'll look for notes. They'll look for paper notes. And those will work for a while. But once this situation I started this presentation with the Evergrande situation, and you've got Blackrock and Vanguard going down, you're going to see more and more trouble. And the last thing I want to say is for the crypto people out there, which I am affiliated with the LODE project. It's ag.lode, LODE.one. You can look it up. I am concerned that some of Tether's investments are associated with Evergrande. And if that's true, and I believe it is, then we could see a very big disruption in the crypto space, because Tether is basically the pinnacle of how the whole system works. Without Tether and the stable coin, you have a system that is very, very fragile. So if you are invested in doing well in that space, I would have a tight stop or maybe sell off some, take some partial profits, maybe get your original capital back or maybe a little more depending on your exact situation. And I'll finish with this. There's a few seconds left, but remember, there's no fever like gold fever, none. When there's a financial panic through all of history, all of recorded history, on the monetary side, you see nothing like a run to gold. And a run to gold is something to behold. But silver, in today's high technology sector, in our world that depends so much on communications, silver will actually be the biggest winner. I still hold that view. I hope that everyone has a great holiday season coming up through the rest of the year, and let's make 2022 the year to shine in the precious metals. This is David Morgan of themorganreport.com. All right, everyone, I hope you enjoyed that presentation. And now it is on to some company introductions. As I said earlier, every one of these companies has been in the Morgan Report. And anyone that knows me knows that we're pretty picky. So that means all these companies had enough merit for me to take our time to investigate and give our opinion on these 4 companies. First up will be Blackrock Silver. Blackrock Silver Corporation flagship is the Tonopah West project in Nevada. And we just did a write-up on it recently. I also did an interview with Andrew Pollard on it. And I think without further ado, I'll bring Andrew on and he can give his presentation. And there will be a Q&A session at the end. And I'll be happy to be there with you as we take questions on the 4 company presentations.
Awesome. Thank you, David. Man, it's good to be back here in person. It's good that my suit still fits. Many of you guys beaming in virtually. This is our 4th time presenting at Metals Investor Forum, but it's our first time actually doing this in person. I guess with David, this would be our 3rd invitation from the likes of Brian London, Peter Croth, who's here, and David Morgan. And I think this is a very exciting time for us to be getting in front of you here. I'm hoping to make every single one of you look good that have helped back us so far. Certainly some forward-looking statements coming up. We're not going to go too far in advance because everything I'm talking about now is going to be discussing our maiden resource estimate, which is going to be dropping early next year. So you don't have to come too far in the future with us, but I'm expecting between now and then it's going to be a bit of a wild ride. So, ultimately, we're silver, gold, but at the end of the day, anyone that's coming and tuning into a presentation like this wants to know about the money side of it and how is my money going to outperform the rest of the market. It seems this week's been really, really interesting for gold and silver, and they say a rising tide raises all boats. I'm thinking that what we've got lined up over the next few months might be a bit of a tidal wave. We've got 32 drill holes at the lab right now. We're staring down the barrel of our biggest catalyst that we've ever had, aside from when we hit on our first drill hole last year, which added $100 million to our valuation overnight. And between now and delivering that resource, we're off hunting for some blue sky in the form of new discoveries. We just closed the financing last week, of which First Majestic participated in for their second subsequent, time at bat with us. So the winds that are back and the skies are blue. So as David said, our flagship assets, the Tonopah Silver District, this time 100 years ago, would have been probably the center of the universe in precious metals mining in America. In the span of about 30 years, Tonopah produced 174 million ounces of silver and just under 2 million ounces of gold. So we're talking about 100-to-1 silver to gold ratio roughly, and all of that production was off of 7.5 million tons, meaning this is a high-grade district. We're the first group to go back in and start drilling the vast majority of our property since production shut down, meaning this project, which is literally halfway between Las Vegas and Reno. In fact, the highway that connects them goes right across our property, and we're drilling right next door to it. This is the first time that anyone's been back in since historic miners shut down. And at the time, we thought it was because of low metals prices, and we did a basic proof of concept drilling last year. We confirmed that on drill hole number 1, and we're now the most active silver exploration story in North America by a country mile. Probably one of the most ambitious programs in the world right now. No, everyone thinks of Nevada, they think about gold, but Nevada's a state because of the massive silver discovery, and that was in the Comstock lode of the 1860s, and it stayed a state because of the Tonopah Silver District. Effectively, Comstock helped to fund the American Civil War. That petered out after about 20, 30 years, and by 1890, about 2/3 of Nevada's population had left. It was the Tonopah discovery in 1900 that was the mass real frontier, gold rush that happened up to World War I, and it kicked off some of the biggest discoveries, which now make up the Walker Lane trend, including Goldfields, Bullfrog, etc. But none of that would be there without Tonopah. So even today, I mean, right next door to our project, there's a mining museum talking about the significance of our project, and we're the first ones to go back and, to do any drilling on it. In the silver space, and this seems like a silver panel, silver primary projects are very few and far between. Silver is normally a byproduct, and it's, lead, zinc, copper. So to have a silver primary project, I mean, there might be 60 stories on the planet that could say that, but most of them are, polymetallic, meaning they're putting in, as I said, lead, zinc, copper, all those sorts of things, and it's a bit of financial engineering to say that you're a silver company. With us, we're just drilling high-grade silver and gold in Nevada, and where you look at most silver production, most of that's coming from Mexico, Peru, Argentina, Bolivia, China. Being in Nevada is a good place to be, according to the Fraser Institute. We have private land in Nevada, meaning we don't even have to deal with the federal government. We're just dealing with the state. So in the grand scheme of things, it doesn't get any better than that. So, there's many books, history books written about Tonopah, but the story's easily most told just by this bar chart here. And really what this bar chart here shows is the production. Now, Tonopah was discovered in 1900, effectively in the middle of nowhere by a prospector, a rancher, and his mule. They big outcropping veins at surface, and this kicked off a massive gold rush. Within about 10 years, it was producing 14 million ounces silver equivalent per year, and some massive companies came in. Tonopah, as I said, not only was a big producer, but at that time it helped fund San Francisco after the big earthquake there, and it formed the basis of a lot of companies on the Philadelphia Stock Exchange. Now you see production drop off right before World War I, makes sense, but the nail in the coffin for the district was in 1923 when silver prices and gold prices became unpegged due to the Pittman Act being rescinded. Silver going into that was being bought for $1 an ounce. Within about 3-4 years, it went down to 35 cents an ounce. We're the first group to go back in since that the vast majority of our property went into Chapter 11 in 1930. And our first drill holes into it last year, we hit 30-meter vein of about 1 kilogram per ton. As I said, that added about $100 million overnight and had the likes of Eric Sprott calling us the next day. You'll see on the map here that olden-timey thing. That's what this district looked like in 1912. All those different colors represent different publicly traded operating mining companies. The district, as you can see, it's an east-west trending corridor of veins. So the discovery was made on the east side of town from these big outcropping veins at surface. And over time, they just mine these veins, doing drifts and crosscuts, and they mine them westward. So Blue Sky was, all the production moved westward over those 20, 30 years that you saw previously. We now control the entire western half of this district. So you cut down that olden-timey map, that's what we have now. And between 1912 and 1930, when these claims went belly up, there was lots of consolidation going on. So that purple portion that you see on your screen there, that was the consolidation, consolidated holdings of a company called Tonopah Extension Mining Company. They gobbled up all of the smaller sort of players in the area, and then it was them that went underwater just because of the tanking metals prices, and it's those claims that have been held ever since. We're the first group to get our hands on them. Our first drill hole proved that concept I told you about. They did not stop drilling because they ran out, and they've left a lot of goodness for us. Since June of last year, we've done 100,000 meters of drilling. We've got 2 big discoveries, effectively 2 separate vein corridors. You'll see on the top right hand of your screen is all those purple dots represent what we call the Victor area, and that in the central area, that's what we call DPB. We're going to be delivering a maiden resource estimate in a few months' time on DPB.
What's interesting about this photo here, the satellite image, is that red thing cutting across our property, that's the highway. We're literally drilling on both sides of a highway, and you'll see on the eastern portion of the map there, that's the town of Tonopah. It's, in terms of infrastructure, doesn't get much better than this. So what has all this drilling done for us? Well, we've hit 10 different veins now. You lay them end to end, it's about 6 or 7 kilometers of mineralized strike, and these have been phenomenal grades we've been hitting. Our last set of results, we hit over 5 kilograms silver equivalent, which included over 20 grams gold and just under 3 kilograms pure silver. This is bonanza grade stuff. And you know, historically, these were high margin producers, and up until metals prices tanked. And we think that well, it's low hanging fruit for us to really advance forward and develop. Now, what you'll see here is of these 10 veins, our maiden resource is going to include 6 of them. It's that yellow polygon you see there. What that means is that most people say, you know, why would you put out a resource in cap or upside? We're not doing that. That's just over half of our veins. We've got our Victor side on the upper right hand there, which we've already got 4 veins there, which go over 500 meters each. What we're trying to do is show the market that by delivering this resource, not only can we re-rate and actually get valued by analysts correctly just on the ounces in the ground, but we'll show the upside on those other veins we've discovered there. And that'll allow us to hopefully go underground next year and start drilling out these veins, not from surface, but underground. And that's where the rubber hits the road in terms of adding ounces. We've got 10 veins. This is our biggest one. This is the Merton vein. Right now, we've got 1.5 kilometers of strike delineated. Now, on average, this is about 3 meters thick, which is plenty for underground mining. Now, top to bottom, it's about 4 football fields. But the grades here, the grades at Merton alone are over 600 grams per ton silver equivalent. And we've got step-out holes at the lab on Merton right now, while we're waiting for more infill results, that are testing up to another 500 meters of strike here. So this is going to keep growing while we wait for the blue sky to set in. And this blue sky that we're doing right now, that the maiden resource definition program's finished off, is we've just staked 20 square kilometers of new claims here, and we're going to be drilling some blue sky discovery holes while we wait as well. Permits are expected here in January. We're going to hit it with the RC rig, and while we get the resource out in probably February, we're hoping to make some new discoveries. That's my time. Thank you.
All right, thank you. Next up is Tinka Resources, Graham Carman. Tinka is an exploration and development company with its flagship property in Peru. The indicated mineral resource at the project is about 7.5% zinc, about 17 grams per ton silver, and a little bit of lead. They also have a fairly significant tin zone, which is at about 1%. Tin is more significant than most people think about. It's not really talked about much in the resource sector, but it is very important. And on their large land holdings, they also have a copper gold skarn that they are exploring slightly. So with that said, let's turn it over to Graham. I think it is a presentation that's been taped, and we will take that on and move to the next company. Thank you.
Thanks very much, David Morgan. It's a pleasure to be with you guys here today. Today I want to talk to you about our flagship AWULKA. We've just put out a PEA. We just announced it to the market a couple of weeks back. I'm going to present the update for that, plus some really exciting growth potential that we've got at Tinka with the Sylvia copper gold discovery that we just announced. So our flagship property is the AWULKA zinc silver project, and it's one of the best undeveloped zinc deposits in the Americas. The PEA shows that it has the potential to be a top 10 global zinc producer. The PEA has an NPV 8% of $433 million US dollars with a strong IRR, and that's at a spot price of $1.20 zinc. If we use current spot prices, you can see on this diagram that the value is a heck of a lot higher. We also have a tin resource. The tin was not incorporated into the PEA, and we'd like to incorporate that as we go further down the road with more work. In addition, as I mentioned, we've made a new grassroots copper gold discovery. That's really exciting for us, so looking forward to telling you about that. We've got a fantastic team down here in Peru. I'm currently in Peru. Unfortunately, I couldn't be with you today, but it's where I'm talking talking from Peru today, and we've got some really strong partnerships with Buenaventura and Nexa as key shareholders for Tinka. This is the top 10 global zinc production slide if we were producing today based on the PEA. So we'd actually be the 8th largest zinc mine in the world. So this project really has a lot of potential, huge resource, and a lot of value sitting up there in the ground at Awilka. Apart from zinc, which is an essential commodity for the modern world and critical for steel production and transport infrastructure, also for human development, there's a number of metals that we have at Tinka that really are essential for the green energy revolution, including, of course, silver. Silver is an important addition, important value add at Awilka. It's key in it as an industrial metal, but also obviously as a store of wealth, and really important solar panels, electronics. And tin, of course, is the most valuable of base metals. It's 10 times the value of zinc, and it's essential in electrical circuits and mobile phones. Of course, well, we all know about Dr. Copper. We can't do without copper. As a snapshot for Tinka, this is a summary. We've got 340 million shares issued, market capitalization approximately 68 million Canadian. We've got a strong cash position, and we have a really excellent management team and supportive directors and shareholders. This is where we're located in one of the world's key best base metal belts, central Peru. Peru is a major producer of copper, zinc, silver, and tin. Mining is critical to the economy in Peru, and we're confident that things are going to continue moving along as they have been for years now on the Peru mining space. Now we're going to zoom in on this area in central Peru, but before we do, base metals have been running hot. Zinc is certainly hot, copper's hot, tin's hot, everything's hot. So we have all those metals, guys. So take a close look at Tinka, and you realise that there's a lot of value sitting in this company. Again, the flagship property is Awilka. We've got nearly 9 billion pounds of zinc in the ground, 3 million pounds of indicated resources, and nearly 6 billion pounds of inferred zinc. Billion pounds of zinc and inferred resources, plus very meaningful silver that comes along on top of the zinc that occurs with it, along with lead. And I mentioned the tin and also Coquipukro, which is a silver oxide deposit, which actually brought us into this property in the very first place. Here's the map of central Peru. We have excellent infrastructure, really good roads, port, only 200 kilometers away, just outside of Lima. We've got a zinc refinery just outside of Lima. We're anticipating sending all of our zinc concentrates to. The road that goes through Awilka, past Awilka, is in the process of getting paved. We've got support of local communities, and we're surrounded by lots of mines. This is a claim map showing our claims split into the two projects, Awilka in red and the Sylvia project, which is our new project, in blue. We're now one of the largest claim holders in central Peru, with over 460 square kilometers of claims, again, surrounded by mines. We put both of these claims into two separate companies, and it allows us to think about essentially dealing both projects separately down the road. We own both projects 100%. This is a plan view of the resources at Awilka. The different colors are the different areas. The highest grade areas are actually in red, which is the area known as south. The blue area is west, and those are where our indicator resources are. You can see the density of drill holes is higher in those areas. The resource is still open to the southwest and to the south. Now the tin zone is highlighted by the grey, and you can see that it's overlapping those other colours. Now this is what it looks like in cross section. This is straight out of our PEA. The tin zone is shown here in grey black down below. Now the geology you see is kind of like a dome. The green rocks underneath are domed up, and that's right where our deposit sits, inside of this blue rock, which is a limestone. And the massive sulfides have come in and replaced those limestones and formed some really large, thick, high-grade zones of mineralisation. This blue area is the west, and the green area here is the central zone. This slide here is a section in the opposite direction, so we're now looking west, and you can see this is the south zone, our highest grade, thickest deposit. We've got nearly 250 meters, 300 meters here of beautiful high grade zinc sulfide mineralization at south. Now, for those who like numbers, this is a summary of our resources. I won't dwell on this. If you want to check out the numbers of the resource tables, please go to our website or review the presentation that we've got at our booth. Now, this is the exploration potential showing the gravity, or we could equally show the magnetics. And this highlights really the potential that we have around the existing resources. That the zinc is always on the edge, or the best zinc is always on the edge of these geophysical anomalies. And you can see there's a lot of anomalies here that have not yet been drilled, including the area that we call far south, the area that's called Zone 3, and the valley only has a couple of holes in it. So there's a heck of a lot of potential still at Ayawilka associated with these geophysical anomalies. Now, in the mine plan for the PEA, this is what it looks like. We've got 1.5 kilometres of strike west to east, starting in south and west, and eventually ending up in east and central over the years. This is the zinc production over the life of mine in the PEA, 15-16-year mine life. You can see that there's higher grade and higher metal production in those first few years, which really drives the value of the project. And the project is obviously sensitive to zinc price. As I mentioned, we used $1.20 for our base case, and the current spot price is up near $1.50. So obviously the value at the current spot price is much higher than what we claimed in our PEA. Now, for the remaining time, I'm going to talk about Sylvia, our exciting new discovery, which we acquired from BHP just a few months back. It's a large area of claims, 260 square kilometres. BHP did some of the hard work for us. They identified these anomalies by doing airborne geophysics. Now, I'm just going to focus here on this area that we call Sylvia Northwest. We've been up there sampling in the last few weeks, and we've actually got grades at surface at this thing that this part of the property that we call Area A is copper grades up to 12% in outcrop and gold grades up to 18 grams per tonne. So it's really exciting time for us. This is what Area A looks like. We're looking here to the south. We've got skarns, which are shown here by this darker colour in this valley, and it's really just a window inside of this valley that's exposed beneath these limestones, which are above. Here we go. There's this nice skarn mineralisation that exposed up to 100 metres across. You notice that there's a lot of scree or rubble which has come down from the sides of the slopes, which is covering the outcrops. And we believe there's a potential for this mineralisation to be much bigger than what it currently shows at this 100-metre width. And we've just released some trenching results. We included a trench here of 46 metres at 1.9 grams per tonne gold and 0.8% copper. And as part of that 46 metres, there's a 6-metre zone going 12.8 grams per tonne gold and 2.7% copper. So really nice, high-grade mineralisation. Very rare to see this sort of stuff in a grassroots property in the middle of a mining belt. This is what the mineralisation looks like. Beautiful skarn mineralisation. The green is garnet and sulfides, and you can see the oxide copper just coming through with this green colour here in this slide. So what's coming forward in terms of the work programs for Tinka? We've got some really busy programs ahead. We've completed our PEA at Ayawilka. We've done our resource expansions. We're now focused fully on the Sylvia prospecting. We're going to be working there for the next few months, and then we're working hard on getting the drill permits, and we're going to go all out to try to drill Sylvia, subject to permitting in 2022. There is going to be a bit of a permitting process involved, but we really think it's important that we get it permitted as quickly as possible, and we'll be working hard to do that. But in the meantime, there's going to be lots of surface results coming through from Sylvia. And from Ayawilka, we're planning a 10,000-metre drill program next year to firm up the resource, increase the increase the size of our indicated and measured resources, but also look for some more discoveries at Awilka to keep growing that beautiful zinc project that we've got there. So that's the summary of what's going on at Tinka. Please, if you're at the conference, please go and visit Mariana at our booth. And there's a Q&A session about to take place at the end of the session. So come and join me then. I'll be more than happy to answer some questions from you. See you then, you guys. Bye.
All right. Well, thank you, Graham, on Tinka. Sorry, if you're following the schedule, I got a little off kilter here. Avino was supposed to be the second up, but Avino is next. David Wolfen, I have to, full disclosure, Avino is probably the one silver stock I've owned more times than any other. I've been in and out of the company several times. Very favorable. Avino is a primary silver producer, and their wholly owned mine is in Durango, Mexico. They have a pretty significant gold credit as well. And their strategy's been organic growth. They're unhedged. They're very good with the community. And I started investing in Avino when I was a little more than a teenager, but it was one of Paul Sarnoff's favorites, and that's sort of an inside joke between me and David Wolfen. David, sorry I got you out of order, but the floor is all yours. Looking forward to an update on Avino gold and silver mines.
No problem. Thank you very much, and welcome everybody. 10 minutes is not a lot of time to go through all the slides, so we condensed it to the big news that just happened that we announced on October 27th, the acquisition of La Preciosa from Corp. Avino's been around for over 50 years. We've got over 30 years of production under our belt, but let me get into it here. Going to be making some forward-looking statements, but so it's a primary silver producer, 36 years of production. 500 years ago it was discovered, so it's a mineral-rich area on a volcanic caldera, and a lot of opportunities for future expansions. And so getting into the big news, and so this is a creative, synergistic acquisition of La Preciosa, which repositions Avino amongst silver producers. Summary of the transaction. So on October 22nd, we announced the acquisition of La Preciosa. It's a development stage project with 135 million ounces of silver equivalent. This more than doubles our resources. The completion of this transaction is expected in Q1 because the Mexican Federal Economic Competition Commission has to rule on it. But since we've announced it in 2 weeks, the value of our company is up 20%. And we expect this to continue, and you'll see in the slides why we're so undervalued right now. The history of that project goes back to Orco mining, and Corp paid $382 million to pick it up in 2013. We paid about 10% of that to pick it up, which is equivalent to 25 cents per ounce. They outbid First Majestic, and then in 2014 they came out with a feasibility study looking at a giant open pit mine at 10,000 tons per day, 11-year mine life. Just wouldn't fly under the metal prices at the time, and even today with the left-wing government, it still wouldn't fly. So it makes sense to merge the two assets because we're specialized in underground mining, and that's what we're looking to do, is underground mine this. Here's the terms of the deal. So we issued 14 million shares, closing price 92 cents US, value consideration 12.9 million. The value of 7 million warrants is 1.8 million, and 15 million US in cash, and that is equivalent to 29.7 million in upfront consideration. So that's how you get to the 25 cent per ounce if you divide that by 135 million ounces of silver equivalent. Then we have a deferred cash payment that we'll pay in 12 months of 5 million. 8.8 million will be contingent upon going into production on La Preciosa, and it'll be 12 months after that. So we control the timeline of that. And then outside of the mineralized area, Corp wanted some upside. If we make another major discovery there, that we would owe them 25 cents per ounce for reserves up to $50 million. And then also we gave them 1.25% net smelter on Gloria and Abundancia. These are the high-grade veins near the surface, which we're going to go after right away. Permitting will only take about 8 months, and we're going to do an optimization on a bigger operation. The plan is to grow the company to an intermediate stage producer in 5 years. So that's 8 to 10 million ounce a year producer. And you'll see where a peer group is valuing those companies coming up. Also, Coeur can, as long as they hold 10%, they can maintain their interests, and they can put a board member on our board, but they have elected not to at the moment. They have preemptive rights to maintain their ownership, and they've entered into a voting agreement, so they have to support the board as long as they own 5%. So strategic rationale, it elevates Avino's potential as a silver producer and developer, presents unique operational synergies due to La Preciosa's strategic location. It's 2 kilometers away from our boundary, so it's very, very close. It's highly accretive across key metrics. Positive results from metallurgical test work. So this deal was a year in the making. We signed the CA last year in September. So we ran our own metallurgical test work in our own mill. So it's not based on desktop studies. It's actual. We know it works. We generated 80% recoveries on silver and 60 on gold, which we think we can even improve on those. And it reduces the timeline to development, so this is accretive for both companies. They see that Avino's stock is undervalued, and they knew that this is going to really help boost the value of the shares of the company, which they'll be our largest shareholder with 14 million shares. Increases our Avino's silver resources and land position. The land position will grow by 7-fold. We go from 1,000 hectares to 7,000 hectares. So there's a lot of potential for exploration there. So here's the pro forma consolidated mineralized resources. So if you look at the top, you can see metal content. So actual silver is 45 million M&I and 13 inferred, or 76 million silver equivalent and 22 million inferred. And if you add that to Avino's current, you go down to the bottom down here, and you can see where then we have 143 million ounces of pure silver in the M&I category and 34 million inferred. And then if you look over to the end, that's where you get 189 million ounces of measured and indicated, and another 46, so 235 million ounces of silver equivalent combined. Here you can see how it elevates us in the sector. So the junior comparables are at the top part up here. You can see we have 45 million ounces of M&I silver in the resource category, which is comparable to the group above. But then when you move over to M&I silver equivalent, we're at 118 million. So we're going up the ladder. And then enterprise value over resources, you're at $1.45. So we're extremely undervalued right now compared to our intermediate junior comparables. And then for a measured and indicated silver equivalent, 55 cents compared to the average $1.33. And this is simply because the mine has been down. We just recently reopened it in August. We were doing infrastructure upgrades, building a dry stack tailings storage facility, and automating the plant. And so we just came out with our Q3 earnings on Wednesday. Our cash costs are $6.75 per ounce of silver equivalent. All-in sustaining was 25, but that only represented 1 month of sales. We expect this to normalize in Q4. And down below, you can see what the pro forma will look like, and we're 15 times undervalued. So we're running out of time here. So here you can see measured and indicated where we stack up with the resources that we have currently. We're down here, and that's simply because we weren't in operation up until August. So pro forma, we're going to have the most measured and indicator of any junior in this peer group. Measured and indicated silver equivalent, much the same story here. enterprise value over measured and indicated. So again, we're undervalued. All these metrics show you that we're undervalued. So I'm running out of time here. Again, this slide shows you the same story, where we're heading. So in the next 5 years, we're planning to build, expand the mine so we can produce between 8 and 10 million ounces. So, whoops, sorry. Anyways, they're about $1 billion market caps where we're heading. So you're looking at it, 8 to 10 bagger from here in the next 5 years. And that's based on current pricing. Analysts that are covering us, they were all on the earnings call this week, so we've got good support from them. They've all revised their target prices up, except for a couple. They're waiting for the deal to close in Q1, but they're all north of $2 US. Market cap is 90 million US. We trade over 1 million shares a day and have great leverage to silver. Largest shareholder, I'm the largest shareholder of the company. Coeur will be when the deal closes. And the final slide, primary silver producer, one operation, one management team, and competitive costs, because we're not managing multiple mines, so we can stay lean and mean. 30,000 meter drill program underway right now. And so the leverage to silver, 235 million. This was evident on February 1st when the Reddit Army had the silver squeeze. We traded 129 million shares that day on New York with 90 million shares issued. We raised $17 million thanks to the Reddit Army that paid for this acquisition. It's going to help us grow into the next intermediate producer. And with that, I have to end because we're out of time. So thank you very much.
Thank you, David. Thanks for mentioning the Reddit Army. It certainly has had an influence in the silver market, and I think we'll have even more going forward. Next up will be Fred Davidson from Impact Silver. Impact Silver is a silver and gold explorer and producer. They have multiple things going on. They have basically 4 feeds for the Central Guadalupe processing plant. They have lots of exploration potential, lots of upside. And one thing I'll say nice about Fred, which there are several things I could say that are nice, is Fred is manages a tight budget. He really knows how to squeeze a dollar. So that's a good thing, especially in any business. And mining, of course, is a very can be a cost draining business. Fred took the direct approach. He didn't need to drill. The silver's right in front of him, and let's go get it. And that's the approach he's taken along the whole time I've known him on the Impact Silver package. And with that, I'll turn it over to you, Fred. Take it away.
Thank you, David. I appreciate the introduction, and hopefully we'll even make it more interesting for you over the next year. Usual disclosure requirement. What we are is a small mine. We are 90% silver production. That's pure silver, no equivalents. We've been in production now for about 16 years, and we started off bootstrapping ourselves up. But to give you the real history, this property was first mined in before the Spanish got there. Subsequently, it was taken over by the King of Spain, became the Royal Mines because he liked it so much. And now we're sitting on over 5,000 old workings on the property, 42 old haciendas, which are ancient mills. And what we're trying to do is keep the dilution to a minimum, so we're earning basically as we go. And you can see the fluctuation in our production. It's related to the price of silver. Silver prices drop, we go to the mines which have higher margins. Silver prices pick up, we expand again. We are, however, with cash of over $20 million, no debt. We have quite a program lined up for us this year. Whoops, wrong button. The usual, we are a leader in ESG. We recycle all of our water, and the water which isn't recycled evaporates out of the tailings. We are very strong in employing diversity. 99% of our people employed here are Mexicans, and 100% of the field management are Mexican. We're going ahead, because we're underground, we have minimal disturbance. We're working with the Ministry of the Environment in Mexico, and in fact, we've just been approached by a group that sells carbon credits, wanting us to create credits for them. Because we're so leveraged to the price of silver, you'll see what happened, for instance, March to July last year. Price of silver went up 37%. our stock price went up 149%. Where we are located, we're on the epithermal Mexican belt, very near the south. We're adjacent to Tasco, a very famous silver producer. And yet south and west of us are volcanogenic massive sulfides like Campo Morado. The property itself is outlined by this outline. We don't own all of it, we own a significant portion of it. But let me very quickly tell you what we have there. One is where our production is. Our main mill produces for 4 mines. The leading 2 are San Ramon and Guadalupe. 2 is an area we haven't even gotten to, so we've got to get to it. It's just, this is 221 square kilometers, heavily mountainous, takes us a lot of time. 3 is a volcanogenic massive sulfide we have. It's got a small pilot plant on it, and it's going forward this year, or next year actually. And 4 is a deeply incised valley. It's about 350 meters deep. What makes it very interesting, high mag in the center of it, radiating off of it is a series of veins, and they're gold and copper bearing. The ticker is IPT on the TSX-V. We've got 143 million shares outstanding. Market cap is about $94 million. You can see as the share performance has taken a crash right after the punch-up we saw with Reddit, and we're starting to respond, but it's taking a little time. What makes us a little interesting as well is we're very broadly held retail. We have 20% institutional and 10% insiders. This gives you an idea of what's happening in the past. We've always maintained positive working capital, positive cash flow, and that's been our strategy going forward. Anything of profits gets reinvested back into the property. The 4 projects we're mining from: Guadalupe, historic producer, 1529 was its first production. Veta Negra, an small open pit, which is actually an outcropping of 2 veins. San Ramon, which we've been mining now since 2004. Then we mined San Ramon Deeps, which goes along the same structure but deeper. And then we're just now going into a brand new area, San Ramon South. So these are the 2 major producers, and then Cuchara is a vein swarm that produces ore for us. There's the mill to the left-hand side. The right beside it is the Capiri plant. The logistics are great. We're within distance of heck with it. Another town which has all the major services we need available. We're on a paved highway. We make our own water, and we're using power from the Mexican power grid. The ones to the right are our competitors, but 500 years ago. Give you an idea. Area 1, Guadalupe. Guadalupe is where we're mining from. Recently, we hit 1.2 kilos of silver over 2.6 meters. We're moving into an area at Guadalupe, into another area that's part of the Guadalupe complex called Pachaqueño. Pachaqueño, we just had a 3.8 meter drill result running over 2 kilos. South of that, and you can see all the old mines there, south of it is Alacran, and Alacran's really exciting, and it's in fact the oldest target in the area for us. 1527 it produced. These are results from 1920. These guys were shipping 20 to 60 kilos of silver. The waste rock was 400 to 500 grams. Now, there's another report similar right after it 1 year later. We're going into there this year. It hasn't produced in about 30 years. It's flooded, and it's obviously one of our higher quality brownfields targets. This is the Capiri. It's a VMS. It's flat line. Strip ratio is just a little over 1 to 1. We test mined it about 10 years ago. Price of silver was $30. Price of silver fell to $13. We shut it down. We're working on ore sorting right now, XRT. We're bulk sample tested it. It works. We're going to look at a sample program of running larger tonnage through it. It's probably going to be a production target for us again next year. 200 to 300 ounces, and maybe sort of the equivalent in lead zinc. This is that one I mentioned to that, there's a deep valley in between these 2 mills. It's about 350 meters deep. Traditionally, the ore here runs high-grade silver at surface. As you go to depth, it falls off to lead zinc, silver falls off. Then it gets into a blank area. Below that, we've found there's a whole district, if you will, of copper gold, and it outcrops down in the bottom of this valley. And if you look at the picture, as you go to the left and up to the top, there it rises, this district rises closer to the surface. One of the old mines we've just sampled ran 97 grams gold, 97 grams silver over about 0.8 of a meter. All of these old mines were hand steel, so they didn't mine stuff that they couldn't make money on. So it's a fairly dramatic target, but it's not our best target. We probably won't even get around to drilling it to next year. This year we've drilled 10,000 meters. We've come up with some really great results. We're going to drill another 20,000 meters in the near future. We have our own drills. Our drilling costs are amongst the lowest in the industry. I can tell you they're around $60 a meter. The team we've got, I've been in this business too long. This is the 5th mine I've developed along with the team. George Grzinski is well known to a lot of you. He's got Fireweed Zinc going. Jerry Wong is our CFO. Armando Alessandria is our COO. All of these people have been with us now for 16 years. They really believe in this as a major district. We're going to develop it, and we're going forward developing it. For undervalued, everybody tells you they're undervalued. The only thing I can say is our market cap is very low. Working capital in cash is over 23 million. We have no debt, and we're actually profitable. It's something that normally you don't talk about when you're in mineral exploration. So here's what we're going forward for this next 12 months. We are one of the purest silver plays in the industry. At over 90% of our revenue is generated by silver. 2, we've had long-term stability in the production, but that's going to change because the Guadalupe mine, for instance, which has been producing, and the mill's been producing at 400 tons a day, as we get into Pachaqueño, will expand its production and grades will be rising throughout the next year. We have targets like the gold at Chapinel, and in fact we have a number of targets. They're going to be tested this year. Historically, the Aztecs have mined from this area for 500 years. There must have been something there. Excuse me. We're going ahead with Capiri. Capiri is a VMS, simple mining. It's not high grade, but you make mines. You find deposits, you make mines, and we're very good at making mines. And we have a district-wide exploration program that we've committed to with GIS and AI. We've identified over 100 targets that are suitable for drilling over the next couple of years. And many of them are very much like Alacran. That's the future. Thank you.
Thank you, Fred. Well, that completes our package of Blackrock, Tinka, Avino, and Impact. So we are going to go to the next room. So please join us. We are going to take question and answers on these 4 companies. And of course, you can question yours truly on these miners, silver, whatever you'd like. But primarily it's for the companies themselves.